A completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop.
The basic idea goes a little something like this.
A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial, be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run, it's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, oh, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to move pods and maintain the near vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. In a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects. And the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for, and why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's done super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest, because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world.
Ah, yes. That's only because policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. Right. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option out of the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the projects. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source. and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and also on Bloomberg Quick Take. It is Tuesday, November 15, 2022. Carol Masser along with Tim Stenovic. And risk on until we're not. We did see stocks buoyed earlier, Tim, by today's weaker inflation print. And then we had a change of heart due to some kind of sobering headlines.
Yeah, the AP reporting that Russian missiles crossed into Poland. The AP citing senior U.S. intelligence officials on those missiles. After that, we saw the dollar erase the drop and bonds gain as Russian missiles fueled a bid to havens.
All right, we're going to talk about that and the impact on the financial markets. Also ahead, our most read story today, Goldman's $12 million payout to bury a sexism claim. This is a must-read as well as a most read.
Yeah, and among the exclusives that we've got today, Citadel's Ken Griffin on politics, we'll hear from him, and also Skybridge Capital's Anthony Scaramucci on crypto. You'll recall that Sam Bankman-Fried bought 30% of Skybridge just a few months ago.
Yeah, exactly. Some great interviews from those two individuals. Plus, we'll talk about Google's Moonshot Lab. It is now counting strawberries. And then we're going to talk with New York Times bestselling journalist, former Bloomberg contributor Bill Cohen about his new book. It's on the rise and fall of an American icon. I'm not going to tell you what icon he's talking about.
It's a big book, and we're looking forward to having him in the studio. All that and more to come. We begin, though, with a check on the trading day and Charlie Pellet.
Very much lots going on. Let us begin with where stocks are right now in response to the developments out of the Ukraine and Poland. First of all, we have the Dow down 99 points, drop there of 0.3%. S&P narrowing its advance, up now by 12 points, up by 0.3%. Nasdaq up 101, higher by 0.9%. Stocks have been swinging between gains and losses. Treasuries rose as geopolitical worries from Europe fueled a move away from risk assets. The 10-year yield 3.79%, the 2-year 4.36%. Spot gold up 0.3%, 17.76 the ounce, while West Texas Intermediate crude is up 2.2%, 87.69 a barrel on WTI. Bitcoin up 1.9%, 16,694. Bitcoin does appear to be stabilizing after a week of volatility tied to the collapse of FTX. Anthony Scaramucci's firm, Skybridge Capital, was caught up in the implosion. Now at the Bloomberg New Economy Forum in Singapore, Scaramucci said he's trying to repurchase the part of his company that FTX acquired just months ago.
I'm hopeful that I'll be able to negotiate now with the trustee or the administrator of the bankruptcy a reasonable price for that equity, and we'll buy it back. And our business has been hurt by the association. There's no question about that. But I also think it gives me an opportunity to talk about this very transparently.
And again, we do have Bitcoin up 1.7% right now, 16,664. We'll have more on the topic coming up here on Bloomberg Business Week. Bonus season looking grim on Wall Street. Year-end incentive pools are expected to drop sharply across the finance industry amid a pullback in mergers and acquisitions, persistent inflation, and the threat of a potential recession. Among some of the biggest Wall Street banks, we've got Goldman Sachs down 0.1%, Morgan Stanley up 0.1%, JP Morgan down 1.1%, Citigroup down 0.5%, Bank of America down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get to the Market Drivers Report. And let's set the Business Week agenda on this Tuesday. And joining us in our Bloomberg Interactive Brokers studio, Bloomberg News markets reporter Abigail Doolittle. And also with us is Molly Smith. She's economics editor at Bloomberg News on the phone in New York City. We did get some important inflation data this morning. But first up, Abigail, let's go to you because we all were in the newsroom when all of a sudden what was a pretty consistent rally in the U.S. equity trade fell off a cliff. And we saw stocks all go down.
Yeah, it's really pretty dramatic. And I was sitting there watching it, and I actually was not quite aware of what was going on until starting to look at some of the headlines. And of course, does have to do with Ukraine and Poland. And there is a report from a U.S. official saying that missiles crossed into the NATO member, Poland, that they will be convening an emergency meeting. And on this, you had the S&P 500 basically go from up 1.5% to right now up 0.1%. The Dow itself is down about 0.5%. The Nasdaq, which had been up more than 2%, up now just about 0.6%. So the gains that we had earlier from that positive PPI report, because it came in less than expected, really wiped away by the uncertainty of these headlines. This is the sort of action that you see when these headlines cross. It's a knee-jerk reaction. Investors get nervous, the uncertainty. At the end of the day, though, investors want to ask themselves, will it affect the U.S. profit outlook? These events in and of themselves may not. However, I will say, if it's true that Russian missiles went into a NATO member, that could be somewhat serious. That could have longer-term implications. So until there's more certainty around that, I think that you're going to see this kind of knee-jerk reaction. And then you also have bonds rallying. They were rallying before, though, on that PPI.
Another reaction, we're certainly seeing it in the energy markets. WTI crude futures have kicked up to they went up to a high, pulled back a little bit, but they're still now up about 2.4%. Very different trade from what we saw earlier in the day.
Yeah, earlier you did have energy down, and to your point now, up 2.4%. Another dramatic move is the dollar. Earlier it had been down about 0.4% with yields. Now it's up. The Bloomberg Dollar Index is up just fractionally. The DXY, which has more of a weighting to the euro, because the euro, of course, is down about 0.4%. The DXY is now up about 0.4%. Where we're seeing a truly dramatic move are the defense contractors. Northrop Grumman, Lockheed, Raytheon. Northrop Grumman right now is up 5.5%. I was looking at a chart. Yeah, a big move. I think right on around those headlines.
Those all just happened within the last half hour?
Yeah, I believe so, because I was watching. So these stocks had been up with the broader market earlier, but then right around 1:30 or so, taking a leg higher, frankly, before the headlines really came out, which is how the markets work.
I've got Northrop Grumman up on my Bloomberg, and you definitely see the jump up on this
news. Yeah, really remarkable to see the quick equity market reaction. Hey, Molly Smith, come on in here because you cover economics. You've been up since early in the morning with this eco news that we got this morning. Abigail just mentioned it. The PPI, producer prices, cooling by more than forecast. This coming after a cooler than expected CPI print. And we saw equities move higher as a result. Dig into the data for us, though. Is this a win for Team Transitory?
Hard to say. I mean, I don't know if you can really call it transitory if we've been experiencing above 2% inflation for over a year now. But
I should probably be banned from saying that word.
I know. Who let you in this studio, buddy? I'm just kidding. I'm just kidding.
But you know what? It's a good sign that inflation is moderating and welcome news, what was, before these headlines on Russia started passing the wire. But yeah, this is definitely encouraging, especially after the CPI report that we got last week, especially when you look at some of the core goods measures. So looking at price growth for goods, ex food and energy, seeing that was down in October, which hasn't happened for, I think, since the early days of the pandemic. So that was a very encouraging sign as well.
But what's interesting is, and what these headlines we're getting, and obviously it's just breaking within the last 30 minutes, 45 minutes or so. But you're reminded, Abigail, that while we watch, and it's really important to watch the inflation data because it's tied to ultimately what the Fed will do and impacts certainly the U.S. markets, and it impacts global markets, geopolitical events. It's just a reminder that stuff can come from anywhere.
Yes, that's a great point, Carol. The uncertainty that we have faced in 2022 and continue to face, particularly as this situation develops, it really, is a reminder of that. I can't remember the last time that the war in Ukraine was discussed at such length with the markets. This might be similar to the move that we saw back in February when it first began. Right. We've had it in the narrative the whole time, but we haven't talked about market moves specific to it, to my memory, all that much. And here we are, just sort of out of nowhere. We have a situation where it does seem again that two Russian missiles may have crossed into the NATO member. That could be a long-lasting story. That's something to watch. And it's interesting. It'll be very interesting to see how markets close today. Right now, you have the S&P 500 up about 0.2%. The close will be critical. If markets fade into the close, that would be called an ugly close on this sort of event. Again, these tend to be knee-jerk reactions because they don't affect the profit outlook. But if this turns into something bigger because of Poland being NATO, that could be a problem.
I do wonder how many people right now are Googling Article 5 of NATO because Poland is a NATO, right? All the NATO allies, do they have to respond potentially if this was an act of aggression.
Hey, Molly Smith, I want to give you the last word here. We thought today it was going to be about PPI, but it's about national security. What's your take?
Right.
No, I mean, it's a great point. I'm glad Carol brought that up because I was actually just speaking to our chief Bloomberg economist last week about the inflation outlook for next year. And she was saying, it looks like pretty much all drivers of inflation are coming down except wages in the service sector. And she said critically, absent a food and energy shock. And that's exactly something that, the war initially started back in February. And certainly any signs of escalating that could further put a damper on food and energy supplies.
Yeah, we're going to talk about food prices a little bit later on, actually, on our broadcast. All right, guys, thank you so much. Molly Smith, economics editor at Bloomberg News, on the phone in New York, and always our thanks to Abigail Doolittle, Bloomberg News markets reporter here in our Bloomberg Interactive Brokers studio.
Let's stay with this latest national security news. We bring in now Bloomberg News national security reporter Nick Wadhams, who's standing by on the phone from Washington, D.C., to talk about these missiles, I should say, that landed in Poland. Nick, I want to go through the headlines as we know them. Russian missiles crossed into Poland, killing 2. The Associated Press has cited senior U.S. intelligence officials on these missiles. It is a business story, too, because we saw markets pull back and we see defense stocks jumping as Poland has convened a security meeting. Give us the latest in your take, Nick.
Sure. So the context here is that Russia launched a massive missile barrage against Ukraine tonight, striking targets essentially across the country and provoking widespread electricity blackouts. So, there's still so much we're learning, but it would appear at the moment that these were missiles that were intended to hit Ukraine and then it crossed over the border into Poland. So obviously there's a lot we don't know. Poland's National Security Council is convening a meeting right now to discuss it, but there will be a crucial distinction over the coming days as we try to get more information about whether this was an attack on Ukraine and the missiles just went astray versus a deliberate attack on Poland. And so far it's looking more like the former. The issue there, though, is that Poland has been one of the most hawkish members of NATO on Ukraine, wanting to supply it with more weapons and things like that, and has long warned about something like this. So there's going to be a lot of question about, how they respond and how aggressively they respond.
It's kind of interesting. I know it's early in the morning over in Bali, but you have all those G20 leaders meeting right now, and you can only imagine if they're waking up, getting told about this, the conversations. Having said that, if ultimately it is an accident, how do we assess this geopolitically in terms of the impact, Nick?
Well, I think what you would probably see, the impact would be a little bit less given, the U.S. and its European allies, Western European allies, France, Germany, the U.K., for example, have all their overriding concern in this whole debate and after the Russian invasion has been to make sure that NATO and the West do not get pulled into a broader war with Russia. They want to help Ukraine as much as they can, but they've been very conscious about making sure they do not provide certain assistance or get involved in a way that would pull NATO into a war. So you can expect that that's going to be the focus of their work, and there's going to be a lot of conversations between U.S. and Western intelligence officials with Poland to try to figure out exactly what happened. And presumably, again, if this was not a deliberate strike, to resist that effort to get pulled into a conflict that would spread across Europe.
Nick, does it matter if it was deliberate or not, though?
I think it will matter a great deal for Western officials, the U.S., given that they really want to keep this thing contained. If it can be phrased as a non-deliberate incident versus an attack. There are all sorts of ways that officials can come up with to make sure that they don't get pulled into something they don't want to get pulled into. But obviously, Poland is going to be speaking out very strongly about this, and we'll see what happens. There is Article 5. An attack against one is essentially considered an attack against all. That was invoked after September 11th. So. Different circumstances now, but we're just going to have to see how this plays out.
I guess I don't want to get into semantics too much here, but with regard to Article 5, that is what my question was about, and I wonder if motivations are necessary for an attack versus an accident.
I think a huge element of this is motivation, and that's really going to be what officials are discussing at the G20, and then also right now. But obviously Poland presumably will say that they believe this was deliberate, or this shows that the risks that they face and the need they have for more weaponry. So certainly it's a tinderbox right now, and this is only going to add to that tension.
Well, and the tricky part, right, is what message is also sent to Russian President Vladimir Putin, right? If it's a softer tone or reaction from NATO allies, does he feel emboldened at this point? And I do wonder how that maybe plays into some of the thinking. And I know we're all speculating at this point in terms of what might ultimately happen, but there's a lot of things to be considered.
Sure, and there's no question that the U.S. and its European allies, Poland, are going to want to send a very, very strong message to Russia, and presumably they're going to be saying, this is exactly why we have been putting so much pressure on Russia in the first place not to launch these sort of indiscriminate attacks, of which they've basically done routinely since the start of this invasion. So, you can be assured the response is going to be very, very strong, certainly verbally, and it's going to up the pressure on the U.S. to supply Ukraine, certainly with some of those more advanced weapons, air defenses, and potentially even aircraft that they've resisted doing so far.
Nick, just one last question. I just want to confirm, has this happened before? I know they've come near Poland, I think earlier in the fight. Do we know if this has happened before?
No, certainly nothing to this extent where two people have been killed. Certainly nothing like this in the last few months. There have been strikes on border towns coming right up against the border, staging areas where many people were killed. But something like this, where it actually crosses the border into Poland, is something new.
All right, Nick, we know it's busy, and we really appreciate you weighing in on this. Our Bloomberg Nick Wadhams joining us, national security reporter here at Bloomberg News.
All right, let's continue with world and national news. For that, we turn to Ann Mostu in our Bloomberg newsroom. Hey, Ann.
Hey, Tim. Hey, Carol. And just to recap, this breaking news you've been reporting, a senior U.S. intelligence official says Russian missiles have hit Poland, killing 2 people. The Polish government has not yet confirmed the information, but says top leaders are holding an emergency meeting. Former President Donald Trump is widely expected to announce a third run for the White House tonight. That's despite a string of losses for his midterm candidates, including Kari Lake in Arizona last night. Julie Norman is co-director of the Center for U.S. Politics at University College London.
Many of Trump's backed candidates did not do well on election night, and that's been very clear. It's important, though, that many of his candidates did still win, and even with the losses, I think Trump will still try and leverage this as much as possible to his advantage.
University College London's Julie Norman says Trump may also cast himself as an underdog to another potential 2024 candidate, Florida Governor Ron DeSantis. Trump's announcement is expected tonight at 9 Wall Street time from his Mar-a-Lago resort in Florida. We will carry that live. Lawmakers say they could raise or suspend the debt limit during the lame duck session, and Democrats are hopeful it will be a bipartisan effort. Details from Bloomberg's Amy Morris in Washington.
Lawmakers likely have until sometime in the third quarter of next year to extend the U.S.'s borrowing authority. Some members want an agreement now rather than relying on negotiations in the next Congress when Republicans will likely have the majority. To do that, they'll need support from all 50 Senate Democrats. Senator Joe Manchin has already said he opposes any partisan debt limit deal, and that's enough to spark bipartisan talks. In Washington, I'm Amy Morris, Bloomberg Radio.
Thanks, Amy. And the director of the FBI says America's overseas adversaries are growing more aggressive and brazen to undermine the nation's institutions. While testifying before a House committee, Christopher Wray said China, Russia, Iran, and North Korea are coming at the U.S. from all angles to undermine security and the rule of law. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Mostu. This is Bloomberg.
All right, Ann, thank you so much. Ann Mostu with World and National News. Let's get back to the financial markets, where we've seen some reaction to that news about the Russian missiles crossing into Poland. With an update on the markets, here is Charlie Pellet.
Very much, Carol Massar. Certainly a developing story, one that we're watching for you here at Bloomberg. We have got the Dow lower now by 24 points, a drop there of 0.1%. The S&P up 24, holding on to a gain up by about 0.6%. Nasdaq is up 141 points, up by 1.3%. 10-year yield 3.80%, with a 2-year yielding 4.36%. Spot gold up 0.2%, 17.75 the ounce, and we do have the price of West Texas Intermediate crude oil up 2.2% right now, 87.75 a barrel. 10-year yield again 3.80%, the 2-year 4.36%, and stocks just turning around for the Dow at least, up now by 9, little change there, recapping S&P up by 0.7. After earnings, briefly, Walmart up 7.4%, Home Depot after earnings up by 1.3%, and that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic live in our Bloomberg Interactive Brokers studio. Well, a lot going on and a most read story on the Bloomberg. It's been the most read throughout the day. Not something you get every day. In fact, not often at all. And that is a big, well-known, iconic Wall Street firm. This time, we're talking about Goldman Sachs, paying out well over $12 million to a veteran executive, a partner who complained internally about a toxic workplace for women in the highest echelons of Wall Street's most prestigious firm.
It's a Bloomberg exclusive from Sri Natarajan and Max Abelson. They were the first to report the news that Goldman Sachs paid more than $12 million tied to a partner's sexism claim, unearthing details of the complaint and its portrayal of leadership culture at the firm. Sri Natarajan is finance reporter for Bloomberg News. He's with us right now in the Bloomberg Interactive Brokers studio. Sri, give us the details here, because the partner still remains unnamed.
That's right, and to Carol's point, it is something that you do not hear about often when people air complaints internally, and especially on Wall Street, where you have the system of arbitration and all sorts of back and forth between employment lawyers and deep-pocketed Wall Street firms. There are almost always non-disclosure agreements, there are secrecy pacts, where you try and resolve the matter with some sort of monetary settlement. What we do understand has happened here is someone very senior at Goldman. If you're in the Goldman's partnership, you clearly are in the top 1% of the firm. Aired some of their ugly experiences. It might have been internal complaints, but it's certainly very rare to see someone at that level lay out complaints like that. And on top of that, it is clear that the Goldman Sachs took the complaints seriously enough that what we ended up with was an 8-figure settlement. The library of these settlements and how much these closed-door packs pay out is very limited. But from what we have in the public database, what we know of from employment lawyers, this would certainly rank among the highest payouts of its kind for a complaint like this on Wall Street.
I guess what also stood out for me, so many different things in your and Max Abelson's reporting. In the story, you note the upper rungs of the firm were rattled by the remarks that this partner described and the roster of people allegedly behind them, allegedly, we should point out, including the CEO, David Solomon. So the allegations go all the way to the top.
And it's important to understand what might have been the motivation to try and settle this. In our reporting so far and all the conversations we've had with so many people that we've discussed this with, it isn't so much that they were worried that are we taking a legal gamble, what if this becomes a public legal fight, and would we be able to win a case like that? It seems, at least based on our reporting, the motivation here was how can we make this go away, because this will be airing a lot of dirty laundry in public. There will be a lot of embarrassment, and that certainly seems to have been a factor. So when you have a complaint, a voluminous complaint that touches on everything from crude and lewd remarks from senior managers to issues about pay disparity, the lack of promotions for women, when you have a complaint that has stuff that, if it becomes public, there's a risk of very visible embarrassment, you are motivated to try and do something about that. You're motivated to try and put an end to it. But having said that, and there might be veterans of Wall Street who look at some of the complaints here and say, you know, what's the big deal? This is how Wall Street's been forever.
Well, there you go.
Despite that, you do get a going price for secrecy when you find out that there's an 8-figure settlement on the cards.
Britri, we are seeing people speak out in a way that they haven't spoken out before. We actually had on our program Jamie Fiore-Higgins, who did write a book about her time at Goldman Sachs. And I'm wondering what, you know, if we take everything holistically, we take everything together, what your reporting tells us about the culture at the company now versus what it was then, and what has Goldman said?
And the Jamie book, by the way, is important. Again, she was a managing director of the firm, spent about 16, 17 years there. A managing director to come out and write a tell-all book is also extremely rare, because even with a managing director, you're talking about someone who was in the top 8% of the firm, even a smaller percentage today than before. So that was unusual, and now you have a case about a partner. What does it say about the broader culture? Is this a Goldman Sachs problem? I think it would be fair to say probably not. This is the culture across the industry, across finance, and across several other industries. The only troubling issue perhaps is some of the things alleged here, some of the workplace behavior that's been described here is not something that goes back into ancient times. We're talking about incidents that happened. This is a settlement that probably took place in 2020. So incidents that were described that took place mostly in 2018 and 2019, that is the now and present. That is not some prehistoric era. What has Goldman Sachs said? It is important to point out that since the story published, they have come out and said that their CEO, David Solomon, is a champion of women, has supported diversity initiatives, and anything that indicates otherwise is not fair. And I'll point out they mentioned that because we do point out one of the crude remarks attributed to David Solomon that was in the complaint.
Right.
They also say that there are some factual errors and they dispute the story, but of course they haven't elaborated what those errors may be or what exactly the dispute is with the story.
Shri, we're running out of time, but I think it was a really very smart point that you said earlier, that it's almost like they were more concerned about being embarrassed versus maybe what was going on. But I'm just saying. All right, check out the story. Shri Natarajan, thank you so much.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. We're on YouTube. We're on Bloomberg Quick Take, and we are live in our Bloomberg Interactive Broker Studio at Bloomberg headquarters. We're kind of all over the place.
We are, but fortunately,
that's a good thing.
Yeah,
Is that a bad thing?
geographically we are as well. Hey, speaking of being all over the place,
Yeah.
we're sticking with politics a little bit because we got a wrap up of what happened. Believe it or not, it's been a week since the election, and we're still seeing House races called, governorships called as well. We're going to check in with Mark Niquette, national politics reporter, in just a few minutes, and then there might be an announcement tonight from President Trump about running for a third time.
He's definitely hinted about it, and that's what we're expecting. All right, so we're going to get to that in just a moment. First up, though, let's get back to the markets and a look at the trade. Charlie Pellet, we're bouncing off our lows on stocks.
Indeed, we've got green on the screen, Carol. The Dow, the S&P, NASDAQ, all higher as of now. Now, a report from the Associated Press this afternoon saying Russian missiles fired at Ukraine landed in Poland, briefly bruised sentiment, but stocks have resumed their advance. Traders are mulling whether recent data showing a slowdown in inflation is enough to make the Federal Reserve pause its aggressive regime of interest rate hikes. The 10-year now yielding 3.80% with the 2-year at 4.37%. Stocks higher across the board. Last update, we had the Dow lower. Right now, the Dow back in the green, up 42 points, up 0.1%. S&P 500 index up 33. That is a gain of 0.8%. NASDAQ up 169 points, now up by 1.5%. Spot gold up 0.2%, $17.74 the ounce, while West Texas Intermediate crude up 1.1%, $86.76 for a barrel of WTI. Walmart's third quarter profits surpassed Wall Street's projections, and the retail giant raised its full-year guidance, showing resilience as American shoppers sought bargains amidst soaring inflation. Jen Bartashis is a senior analyst with Bloomberg Intelligence.
The consumer is holding up relatively well. They are shifting where they're spending and what they're spending on, but they are still spending money, and that is very important as we're looking at the economic environment and heading into that very important holiday season.
And right now we do have shares of Walmart. They're up by 7.5%. Also reporting this morning, Home Depot, its shares up 1.5%. Home Depot reported sales and profit that exceeded expectations, but a decline in the volume of transactions suggests the growth is being driven by inflation rather than a jump in unit sales. Again, recapping, we've got the 10-year 3.80%. Stocks higher across the board now, with the S&P up 31, up 0.8. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you know it, midterms are over. That was last week, and now it's on to the presidential race for 2024. Former President Donald Trump expected to throw his hat into the race again tonight. And with that, we want to head to Palm Beach, Florida with more.
We got Mark Niquette. He's national politics reporter for Bloomberg News. He joins us on the phone from Mar-a-Lago in Palm Beach, Florida. Mark, good to have you with us this afternoon. First question, what's it like down there?
Well, I'm actually outside of Mar-a-Lago right now. We're waiting to get in for the announcement, which is expected at about 9 o'clock p.m. New York time. And the ball.
Mark, you got a lot of waiting to do before that, okay? That's in a while.
Yes, we do. But the ballroom's all set up
Okay.
and ready for Trump's announcement.
I do wonder, too, and forgive me, Mark, you know, we're all kind of trying to assess these headlines of a Russian missile crossing into Poland, and we've seen market reaction. Before we get into what I think everybody is expecting, do you expect maybe the former president to comment on this?
I would be surprised if he did. I think this will be a purely political speech where he'll try and draw the contrast like he has on the campaign trail when he's doing his rallies between his administration and what's happened under President Joe Biden. It's possible, I guess, you could get into current events, but if I had to guess, he'll probably stick to what he said before in terms of making the contrast with Democrats.
All right, so let's talk about that. Coming off the midterms where everyone thought it was going to be a red wave, we've all seen the SNL skits and other things that have talked about how it went down. And we've seen the covers with the former president, whether it's the New York Post and other magazines. it does feel like that there is a feeling by the GOP that this isn't their candidate anymore. Does the president, the former president, address this in some ways, or just kind of moves full speed ahead?
I think he moves full speed ahead. I mean, this was not the environment he thought he would be making this announcement in. He sort of teased before the midterm elections that he was going to make this big announcement today. But at that time, it looked like, Republicans were going to have a very good night, and his endorsed candidates would sweep their election victories, and he'd be able to announce sort of riding the wave of successful Republican wave. And that didn't happen. I mean, I think part of the thinking was, President Trump would announce early, and that would discourage other people from jumping in. But the results of the disappointing GOP results in the midterms, I think, is only going to embolden potential rivals to take him on. Certainly won't scare them away as much as it may have had Republicans done better.
I don't know, Mark. Let's play this out like it's 2015, and we have people sort of looking at President Trump, and then businessman Donald Trump at the time saying this guy's never going to make it past the primaries. You have people like Marco Rubio and Senator Ted Cruz going up against him in running, and ultimately what happened was the party, despite things that he said about all those people, the party unified behind him. Is that era over, given President Trump's lack of popularity now, or would the Republican Party unify behind him if he were again the nominee? And I know I'm asking you to really look out in the future and prognosticate here, but give us your best assessment.
Yeah, I think we're going to find out. I mean, I think the expectation is President Trump still has sort of a core group of committed supporters who come to his rallies and will support him no matter what. The only question is, how large is that group? There's some estimates it could be as much as a third of Republican primary voters. And the question is, do they stick with Trump or does that bleed off? And are we going to see a repeat situation from 2016 where we had 20 some odd candidates running and Trump was able to win the nomination with more or less 40% of the vote because it was so split up with the crowded field?
It's interesting, too, isn't it, today, former Trump Vice President Mike Pence releasing a book. He's out and about talking about it. Does Mike Pence play a factor in the narrative around Donald Trump anymore?
I think he does. I mean, he's clearly trying to establish himself as sort of a sane, common sense conservative who, supports the Trump policies without the drama and the political baggage, and, that there's a lane for a candidate like that in the Republican electorate. But I think the question is still out there about will the core base of Republicans, and particularly Trump supporters, forgive him for not acceding to Donald Trump's wishes and rejecting Electoral College votes on January 6th before the riot at the U.S. Capitol. I think Trump himself has said he doesn't think the base will ever forgive Pence for that.
Interesting. All right. Well, certainly living in interesting times when it comes to national politics. Mark Niquette, looking forward to your reporting this evening. National politics reporter at Bloomberg News, joining us from outside Mar-a-Lago in Palm Beach, Florida.
All right, let's get back to a news update for that. We turn to Ann Mostu for World and National News. Hey, Ann.
Hey, Tim. Hey, Carol. Kevin McCarthy has cleared his first test in his bid to become House Speaker, winning the Republican vote. But it's a long slog ahead to quell the opposition. As we've been reporting, a senior U.S. intelligence official says Russian missiles crossed into NATO member Poland, killing 2 people. The Polish government has not yet confirmed the information, but says top leaders are holding an emergency meeting. Former President Donald Trump is expected to defy the midterm election results and many in his own party with an announcement tonight he's running again in 2024. Julie Norman is co-director of the Center for U.S. Politics at University College London. She says the former president might try to cast himself as the underdog against another likely White House contender, Florida Governor Ron DeSantis.
Obviously, DeSantis had a great night on Tuesday. For the first time this week, he did edge a little bit over Trump in the polls for who voters want for a candidate in 2024.
University College London political scientist Julie Norman. NASA is hoping the 3rd time's the charm for its return mission to the moon. Bloomberg's Nathan Hager reports from Washington.
The debut launch of NASA's massive new Artemis 1 rocket is set for early tomorrow morning from the Kennedy Space Center in Florida. If it holds, it would end more than 2 months of delays caused by technical glitches and poor weather, and it would be a culmination of about a decade of planning for a series of Artemis 1 missions. The goal is to send people back to the moon and eventually beyond. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thanks, Nathan. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Mostu. This is Bloomberg.
All right, Ann, thank you so much. Ann Mostu with World and National News in our Bloomberg newsroom. So we do want to get to a story that's on the Bloomberg, and this has to do with Elon Musk's SpaceX. We're often talking about Elon. We often talk about Tesla. We often talk about Twitter.
Well, and Ann Mostu just talked about Artemis. It could actually launch overnight tonight.
Yeah, so it's definitely on our radar. He's also in talks to raise a funding round that values the rocket launch and satellite company at more than $150 billion. This is a Bloomberg exclusive, and this is according to people familiar with the matter.
The transaction being discussed represents a jump from the $125 billion valuation that the company commanded earlier this year. The people said, asking not to be identified, discussing confidential information. Terms, including the price, have not been finalized and could still change.
Yeah, shares are being discussed at roughly 85 apiece. That's up from a split-adjusted 70 during the last funding effort, according to the people in the know. Investors may buy new shares in SpaceX at the same time employees sell via a private placement or tender offer at the same valuation. Representatives for SpaceX, though, did not respond to our request for comment.
Hey, this is pretty remarkable, Carol, from a valuation perspective, given where private companies have come over the last year.
Mm-hmm.
When we read about fundraisers, which are these days few and far between compared to the last couple of years,
right.
Sometimes they're at a down round. At a round that values the company at less than it was valued at in a previous investment round. This is the opposite. I mean, this is what you want to see if you're part of the company or if you're an investor in the company. The valuation continue to rise. We should note that, these are private valuations. They're not determined by the public markets.
Right.
And again, these numbers could change.
And it absolutely does, depending on the company's outlook. I do want to point out, though, and just looking at an update on this story that's on the Bloomberg, SpaceX, as you know, dominating the market for commercial space launch. It sends payload to orbit for private sector customers, NASA and other government agencies. It also ferries astronauts to and from the International Space Station for NASA and has run the first private space tourism mission for civilians to orbit the Earth for several days. So there's a lot going on, but they are certainly a leader in this space.
Yeah, Ontario, Sequoia Capital, T. Rowe Price, and Ontario Teachers Pension investors right now. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and NASDAQ are all moving higher right now. The S&P's up 29, a gain there of 0.7%. A report from the Associated Press roughly an hour ago saying Russian missiles fired at Ukraine landed in Poland briefly bruised sentiment, but we've got stocks moving higher. The Dow up 20 now, up by 0.1%. NASDAQ up 154, up now by 1.4%. Stocks advanced after producer prices confirmed a slowdown in inflation, strengthening the case for the Fed to moderate its pace of interest rate increases. 10-year yield 3.80%, with the 2-year 4.36%. Spot gold up 0.3%, $17.76 the ounce. West Texas Intermediate crude is up 1.1%, $86.78 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. We've got a crowded studio, which is kind of how we like it. If you think innovation, you probably think about crypto, the metaverse, self-driving cars from the likes of companies such as Google. And yes, some of that goes on at its innovation lab that's known as X. So too does a few projects more down to earth, literally.
Great piece in the upcoming issue of Bloomberg Business Week magazine. You can read it now, though, on the Bloomberg terminal and at bloomberg.com/businessweek. It's written by Max Chafkin. He's a columnist for Bloomberg Business Week. He's with us right now in the Bloomberg Interactive Brokers studio. Joel Weber is the editor of Bloomberg Business Week, and he joins us along with Max as well. I don't know, Joel, when I think of Google X or moonshots, I think of self-driving cars, internet delivered around the world, via sort of Project Loon, I guess you could say. Maybe Google Glass back in the day. I don't think of farming.
Yeah, or maybe strawberries. And you're right. And what was interesting about this story was Max was like, so yeah, you remember X and all those moonshots that they were going for? They've settled somewhere a little closer to the ground.
Literally.
Like just literally inches off the ground. And I was like, tell me more. And it turns out that there's a effort with Driscoll's, who you definitely know because every time you go to the grocery store and get berries, Driscoll basically is the brand that makes those berries.
We all have some in our
And this is not a story about inflation, okay?
No.
This is not a story about berry
not
costs.
Not yet. It'll get there, though. So what Max discovered, though, is that there's this kind of interesting effort to partner between Google and Driscoll and improve your berries. How is that panning out?
Right. So this is an effort by X, which is the quote-unquote moonshot factory of Alphabet, which is the old Google X, to bring essentially Google's technology to farming. And as Joel said, back in the day, X was really focused on these kind of sci-fi type things like Tim was talking about. You had self-driving cars. They were literally talking about space elevators for a while. And basically, over the last decade, that has mostly either fallen apart or dialed back. We've seen a couple of these quote-unquote moonshots be spun off, Waymo being the best and probably biggest example, and a bunch of them falling apart. Glass fell on its face. Loon, which was the balloon internet thing, didn't pan out. There was a wind-powered kite thing that didn't pan out, and a bunch of things that although they panned out, they didn't really turn into the sci-fi thing of the future. And now when
come on, Max, they're moonshots.
And now when you talk to the folks at X, what they say basically is like, we are moving away from the kind of flashy for flashy's sake and more towards real business that could potentially drive profit for Alphabet, which again, a Google executive talking about profit is sort of a weird thing if you've been covering this industry for a long time, because in the old days, the search engine just threw off so much money that they didn't even bother talking about it elsewhere in the company, but they are.
Nice
and so
luxury
this
to
is so what's happening at Driscoll's is they built these basically rovers. They're called. They're sort of smart car sized semi-autonomous tractors that drive over the field, take pictures of plants, and what they're doing literally is counting flowers, counting leaves, and attempting to tell the farmers, in this case Driscoll's, which is the largest supplier of the big four berries to the world, I believe, certainly in the United States. And what they're trying to do is tell them which of their plants are succeeding and which aren't. And that's an interesting problem because although Driscoll's is super sophisticated, they do genetic analysis of in their breeding programs, no one really knows how the genetics correlate to the health of the plant or the harvestability, which is like how high off the ground the berries are. And so they're basically using machine learning to deal with that. And Google, Mineral is the name of the project within Google, has plans to expand this to all sorts of areas. They've got another partnership with Syngenta, which is a major agribusiness, and a bunch of other partnerships. And I think long term, the play is to have some kind of cloud AI service for the ag industry.
First of all, Gregor Mendel would be so happy. But what I'm wondering is, when did ag tech become such a thing for Google, or is it about profitability and maybe another revenue line?
Well, I think it's a couple of things. So one is, if you look in the ag space broadly, there is a lot of interesting stuff going on. Even in autonomy, probably ag is one of the areas where autonomy has arguably, gone the furthest, where you have, self-drive, John Deere and other companies are pursuing self-driving tractors. So clearly there's an opportunity there. And I think really what's happening, number one, is Alphabet is looking for any way that it can kind of broaden its scope, right? It has this wonderful business, which is search advertising, and over the years it's which is this kind of high-tech medical business. That's a play at the medical field, and this is a play for ag. The last thing is, when you talk to the folks at X, and I spoke with Astor Teller, who is his title is Captain of Moonshots. He's the head of the Moonshot Factory, sort of famous for going around the office in rollerblades.
We're all really jealous of that title.
And doing weird kind of Google things. When you talk to him, he basically says that they have been really focused on climate as a challenge, as a potential moonshot, and there is a way to see these innovations in agriculture having, a positive impact on climate change.
Right.
Because if you're able to say, use less fertilizer, use less insecticide, that sort of thing, you're going to have a carbon impact.
So this all sounds good. What does it actually look like in practice? And Mineral is one way that we can.
But that voice is Joel Weber. He's captain of Bloomberg Business Week.
Captain of Moonshots at
Bloomberg Business Week.
It's like a sort of autonomous ATV. It's got rugged wheels, drives over the plants very slowly, about 2 miles an hour. Although they have
crushing one at a time. Very slowly.
No, it goes. It's sort of fitted so one wheel goes on either side of the crop row, and there's like a weird little camera studio inside of the machine with flashes and stuff. It takes a picture of the plants, and then that
we have a picture on for everybody watching on YouTube. And
that image goes into the cloud, into this kind of AI system that is honestly not that different from the self-driving car system or anything like that. And it says, hey, like, what is this plant? How is it doing? How likely is it to produce fruit? And hopefully in the long run, that allows Driscoll's to say, is this a plant worth breeding, worth continuing with, or is it one that should be cast aside in favor of other strawberry varieties?
So is there a chance that after all of this, we might end up with new berries?
Yeah, well, Driscoll's is actually a really interesting story. Business Week has written about them before. There's a great story from 2015 that people can check out about the genetic engineering side of things. But yes, they are developing new berries. In fact, while I was there, I tasted some. They're very excited about this about a brand line which is called the Sweetest Batch. It's basically a way to sort of have these like premium berries that maybe don't travel as well, but cost more, and their badge is sweeter. They're also weird varieties. There's like a pink one. There's some that supposedly taste like tropical fruits. And so yes, in
is
theory,
it still a strawberry if it tastes like tropical fruit?
It only tastes like a tropical fruit in the way that like a glass of wine tastes. It still tastes like a strawberry.
It has notes of a tropical fruit.
I think I made this in 4th grade. That device. I'm just saying. We got to run. Max Chafkin, Joel Weber. This story, the upcoming new issue of Bloomberg Business Week. You're listening to Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes ago in the trading session here in the United States. Romaine Bostick here alongside Taylor Riggs, and we welcome our colleagues Carol Masser and Tim Stenovic for our global simulcast, and we welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take. And Carol, we came in today looking at a rally here in U.S. markets, a rally that's still in place but certainly tempered by the latest news, and what we know isn't a lot. The Associated Press reporting, based on its own sources, that two missiles from Russia did strike within Polish territory. Russia has put out a statement through its own Russian state news agency denying aiming any missiles near the Ukraine-Poland border, and says that reports of missiles hitting Poland is a provocation. Those are the words of Russia. That's what we know now.
Well, this is going to be very key. Tim and I catching up with our national security correspondent at Bloomberg News, Nick Wadhams, who specifically said we've got to get to the bottom of this in terms of whether this was a mistake or whether this was deliberate. This is important when you're talking about geopolitical events. But I will say, in terms of the markets, and what's really smart for us is to watch what's happening too in terms of how investors are seeing this. You know, we did see a lot of selling, or at least a dip down when it came to the equity market. We saw it in, you know, pick your asset classes. We saw oil rally. We've seen those moves off their either lows or highs, if you will. Even the VIX, which shot up, it has moved back. And I think it's just, you know, the markets are trying to figure out, as the world is trying to figure out exactly what happened, and that's kind of where we are right now.
They are also seeing shares of aerospace and defense stocks move higher, led by companies like Northrop Grumman, Raytheon Technologies, Textron, and more. Northrop Grumman higher by 3.8% right now. As an industry group, they're up 1.5%, Romaine.
Yeah, and just when we go and we talk about what the major markets are doing, the S&P 500 at one point was trading firmly above that 4,000 mark. 4,028 was the high of the day. Right now at 39.96, so still up 1 percentage point. Similar story for the other indices, with the NASDAQ composite up about 1.6, the Russell up about 1.7, and the Dow Jones Industrial Average up about 0.2%. You did mention the VIX, which is right now camped out around 24, and yields right now not far off from where they were prior to when this news came out, with the 2-year at 4.36 and a 5-year at 3.925. We do want to go back, of course, to the big headlines here involving the Russian missile strikes that it is said to have landed in Polish territory. Maria Tadeo, our European correspondent for us at Bloomberg News, on the phone. Maria, what do we know right now?
Well, first of all, we have to be very careful because as we speak, there is a defense meeting going on in Poland that is being led by the Polish Prime Minister Morawiecki. The key now is, regardless of the findings of this investigation, which are key, are very important, and I want to stress that for the time being, let's just wait to see what the Polish brief outside of this. But I think it's fair to say, to some extent, that the nature of the war in Ukraine changes after tonight. This was always a risk, that it could spill over into a member of the European Union, that it could spill over into a member of NATO, and after the boundaries, no matter what happens, will be pushed tomorrow morning. The Polish government could well decide, we think this was intentional, we need to have a NATO meeting, and this has to escalate, at least have a meeting with NATO that will bring up the Article 5 of NATO. Remember, this is the biggest military alliance in the world, and the idea is if one member country, one ally gets attacked, everyone else will come in their defense. Of course, that would be the extreme scenario in which you see NATO in direct conflict with the Russian Federation. A lot of things can happen in between that and potentially perhaps taking a different path here. You also know that the Russians, and they already do this, by the way, they say this is not their fault, that this is a provocation, that this has been staged, that this is the fault of Ukraine. So there is a lot of nuance that plays into this. But I think it's fair to say after today, the nature of the war in Ukraine has changed.
Maria, remind us again the significance of whether it was intentional or not, because maybe from the U.S.'s perspective, we've heard from the president, if it was unintentional, it doesn't matter, it's on NATO territory. Is NATO on that same page?
Look, we'll have to wait and see, but Taylor, I think to me that's a real question. If you ask the Polish, and again, this meeting is ongoing, but based on the reporting that we've done, based on the knowledge, the dynamics, you also have to remember that the diplomatic relationship between Poland and the Russian Federation at this point is at a massive low. The Polish government is 100% in it for Ukraine. They say that have said it now since day one, stand with Ukraine. Russia is an aggressive neighbor that feeds off neighbors and will always be an expansionist power that, of course, is detrimental to countries like Poland. They have a very complicated history going back to the end of the Second World War, the Nazi-Soviet pact. I don't want to give you a history lesson, but you see the tensions that have fed for years now between these two countries. And the Polish government could well say, well, we don't care whether it was intentionally or not. It killed 2 people on our soil, and we have to take this now to NATO. Again, all of this is hypothetical because the meeting is ongoing. We're going over a report of AP, and we're waiting for the Polish government and their findings. But you see why dynamics have become so much more complicated, and to some extent, the scale of this war has changed the moment this missile goes into Poland.
All right, and from what we understand, Maria, as well, neighbors affected, and there was a massive power outage after those strikes. In terms of a timeline here, you said we're waiting for the Polish president. Are we also anticipating some kind of statement from NATO at some point within the next, I don't know, is it a few hours or within the next 24 hours?
There will be tomorrow morning. There will be a reaction from the European institutions. Remember, a lot of them are at the G20.
Right.
The head of the European Commission, she is, based on the knowledge that I have, she is in bed. The question is whether she's going to get woken up, and I presume she probably is already awake when it's 3 a.m. local time there. You referred to Moldova. Yes, the power went out, and beyond that, what it shows is that the strikes today in Ukraine were so hard by Russia that it affected not just the entire Ukrainian territory, but also the neighbors, to the extent that a neighboring country had blackouts too.
Maria, help us understand what our audience needs to know about what can happen tomorrow and how this war changes just overnight.
Look, I think we need to hear, as I said, from the Polish, whether they feel like intentionally or not, this changes the nature of the war, whether they care about this being intentional or not. Maybe it's an accident, but if the Polish government says, we don't care, the reality is
Connection
that Russia
lost.
has pushed the limits, the boundaries, and it shows once again that they cannot be contained by diplomacy. They need force. Well, that changes things. I think we also need to hear from NATO, the Secretary General. By the way, today he spoke in the morning. I was following his meeting, and he repeats the allies have to stand by Ukraine. And he's always said Article 5 is something that is sacred. It binds NATO. And the thing you need to understand is that Article 5 is everything for this alliance. If it gets watered down, if Russia pushes the boundaries, kind of contours around it, a lot of people will tell you, what's the point of being in this alliance? This is why this is so crucial to get the response from NATO tomorrow.
Good point, Maria Tadeo, out there in Brussels, our European reporter there, keeping an eye on what's going on, guys. And Carol, I think her last point is really important here, too.
Yeah.
Remember, the last test we had of Article 5 was on 9/11 here, of course, in the United States, where we saw that NATO response. So the last time it was invoked, of course, was under extraordinary circumstances. It will be interesting to see if this rises to that same level.
Well, it certainly feels different, right? But as Maria said, you know, we're waiting for a lot of information to come out in terms of the intentions, in particular, on Russia's behalf. All right, folks, we got to call it a wrap for now. We will be back, though, in less than an hour's time, continuing to follow the markets, our cross-platform coverage Beyond the Bell on radio, TV, YouTube, and on Bloomberg Quick Take. We're going to count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, you are listening and watching Bloomberg Business Week on Bloomberg Radio, on YouTube, on Quick Take, and of course, right here in our studio in New York City. But, you know, it definitely, as Maria said, you know, it does change the tone of this invasion by Russia into Ukraine, especially as potentially the fallout, well, it has widened.
Let's bring everyone up to speed. Poland, a NATO member, according to the Associated Press, was hit by 2 Russian missiles, killing 2 people. This, according to an unidentified U.S. intelligence official cited by the Associated Press. We should note that Russia has dismissed the Poland missile reports as a, quote, provocation. The defense ministry dismissing that, according to a recent story. The ministry says that debris shown in media reports does not match Russian weapons.
Yeah, and we also have seen a State Department spokesman, U.S. State Department spokesman, Vedant Patel, speaking in a briefing, and he says the Russian invasion of Ukraine is unjust and brutal. He says the U.S. is working with Poland to confirm exactly what happened, and this is where we are at this point in terms of trying to understand. It's nighttime over in Europe. You have G20 officials over in Asia. It is the middle of the night there as well. So we are waiting for, you know, more guidance from the various players, whether it's Russia, whether it's Poland, whether it's NATO overall.
Let's get to world and national news. For that, we go to Ann Mostu in the Bloomberg newsroom. Hey, Ann.
Hey, Tim. Hey, Carol. As you have been reporting, Poland, a NATO member, was hit by 2 Russian missiles, killing 2 people, according to an unidentified U.S. intelligence official cited by the Associated Press. The strike was also reported by the Z radio network in Poland, which says the rockets fell about 4 miles from Poland's border with Ukraine. The Ukrainian Air Force has confirmed Russia has fired about 100 missiles at cities across Ukraine. Most of those targets were energy facilities, which could also affect neighboring countries. A, quote, very major announcement is set for tonight from former President Donald Trump, whether Republicans like it or not. As Bloomberg's Joe Matthew reports, he's widely expected to launch his 3rd bid for the White House, despite the GOP's disappointing showing in the midterms.
There have been a lot of Republicans asking him not to do this until the runoff election for the Senate race in Georgia, which is on December 6th. But it looks like there's no stopping this train.
And Bloomberg's Joe Matthew reports that political train is due to depart at 9 p.m. Wall Street time from the former president's Mar-a-Lago resort in Florida. We will be covering that live here on Bloomberg Radio. In related news, Trump has scored a victory in a lawsuit filed by his estranged niece, Mary. Bloomberg's Nathan Hagan reports from Washington.
Mary Trump had accused the former president and his siblings of lying to her about the value of her inheritance and failing to follow through on a pledge to watch over her interests as fiduciaries. But New York Supreme Court Justice Robert Reed ruled that the former president's niece waived her right to sue her uncle and her aunt, former federal judge Mary Ann Trump, in a 2001 settlement. Former President Trump has filed his own lawsuit against his niece for cooperating with a New York Times report about his taxes. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thanks, Nathan. Airlines are scrambling to reach new contract agreements with their employees. Flight attendants for American Airlines are picketing at about a dozen airports across the nation in an effort to improve wages and work life. Meanwhile, Delta is approaching a deal with its pilots union a month after they voted to authorize a strike if their contract talks didn't finally lead to an agreement. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Mostu. This is Bloomberg.
All right, Ann, thank you so much. Ann Mostu with World and National News. Okay, as you know, our top, certainly, geopolitical story at this point is Poland hit by Russian rockets, killing 2 people. This came from the Associated Press. Russia dismissing that report as a, quote, deliberate provocation. U.S. officials are holding back on speculation, waiting for more information. We do want to head to Roz Matheson. She is Bloomberg News executive editor for international government. She is on the phone from Bali, joining us where G20 leaders are right now meeting. So, Roz, I'm not quite sure how much of the news has been heard by everyone over there. What are you hearing about in terms of what's known and how leaders there are reacting?
Well, it's a bit difficult at the moment here because it's 3 a.m. In Bali, but obviously the G20 leaders who've been here will be waking up to this news if they're not already waking up to find out what's going on. But there's very little that's clear. Basically, what we know are the reports that stray rockets, as you said, may have flown into Poland just over the border with Ukraine. Of course, Poland has a large border with Ukraine, and that it has killed 2 people. What's not known is whether these were indeed Russian missiles, and particularly if so, were they deliberately fired into Poland? Were they fired by accident? Because, of course, today Russia has fired a barrage of missiles across Ukraine, again trying to target energy infrastructure. So did these missiles just go astray, or are they actually the debris of missiles that were possibly shot down by Ukraine? So there's a lot that's unclear there at the moment. What we know is that NATO is holding fire to see what Poland is saying. Poland has a Security Council meeting going on at the moment, so we might get some more details from there shortly. But at least what it does is going to put NATO and some of the G20 leaders, especially from Europe, in a difficult position at the moment, because depending what happened with these missiles, what the cause were, it really escalates tensions between Russia and Europe. And the concern has always been that at some point, Europe proper, outside Ukraine's borders, would get hit by missiles. And so this is going to sort of raise big questions there about what kind of reaction we might have to see from NATO as a result.
Hey, Roz, I've been asking this question over and over again, but I must press you on it as well. Does the distinction between an accident versus something intentional really matter? Because for NATO's purposes, is an attack an attack?
it actually does matter significantly because it will calibrate the kind of NATO response. There's a lot of different levels of what NATO can do between what's known as Article 4 and Article 5, of course, which has only been triggered, of course, once after September 11. And NATO has an obligation of collective defense for its members. And so if one member is attacked, that means everybody needs to respond. So it very much does matter if NATO looks at this and says, well, this was obviously a terrible moment, but this was inadvertent, and therefore that's going to design how much we respond, or whether they think that Russia deliberately did something, of course, noting, of course, that Russia is out very quickly with comments denying any attack on Poland and saying that this is false information, that these are not Russian missiles, they did not target Poland. So very quickly out with that comment to start. But it is a very important distinction in terms of how NATO might respond.
You know, Roz, I do also wonder, you know, in terms of this, whether it's an accident or whether it was intentional, I guess we will find out hopefully sooner rather than later. We know what Russia's saying, we know what Poland's saying. But I do wonder, you know, how does potentially this incident, if it was, does it make more sense that it was an accident considering what we are seeing more broadly in terms of what Russia is doing? I mean, Russia was pounding Ukraine's energy facilities today. So I'm just curious, how does this fit against what we've seen more broadly with what Russia has been doing when it comes to Ukraine?
Well, certainly we've seen Russia in the last couple of weeks escalate its missile attacks across cities. That's as its troops on the ground become very bogged down and in some places are in retreat. Of course, we know that Russia recently pulled back from the southern city of Kherson, which it had captured in the early days of the war. And as winter sets in and the terrain gets very difficult, what we're seeing is the fighting on the ground is slowing down. Russian troops are failing to make any headway, and so Russia's falling back on hitting the cities instead and energy infrastructure with missiles. And that's really putting pressure on Ukraine in terms of power outages, obviously designed to make people very uncomfortable into winter months in terms of power shortages and heating, and really putting the squeeze on people that way. So it does reflect that broader shift in tactics, given that Russia is struggling very much on the ground.
All right, Roz Matheson, Bloomberg News executive editor for international government, joining us in the middle of the night, or very early in the morning, I should say, on the phone from Bali. She's there with the G20 group. She joined us for the latest on Russian rockets hitting Poland. Roz, thank you so much for taking the time. We appreciate your input.
All right now, let's get back to the markets and a check on the trading day. We've definitely bounced off our lows of the session. Stocks were initially brought down by that news out of Poland. Let's head over to Charlie Pellet. Hey, Charlie.
Thank you very much. And we are looking at an update here, 43 minutes to go ahead of the close. The Dow, the S&P, NASDAQ, all in the green after an earlier swoon. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks back in the green right now in a volatile session. The AP did report that Poland was hit by Russian rockets, killing 2. Russia has rejected that claim. Dow's currently up 105 points after being in the red. Dow's back, or S&Ps are back up 40, and NASDAQ is higher by 189. The U.S. 10-year yield at 3.79%. Gold is up 7. Oil is trading in the green, and Bitcoin is higher by 2.7%. Among the main 11 S&P sectors, only healthcare and materials were in the red. And leaders to the upside in the Dow, Walmart, Salesforce, and Nike. UNH fell 2%. And led to the downside. After earnings, Walmart rose as much as 8.6%. Home Depot gained 3.2%. And another news, Harker repeated he sees rate hike pace slowing in the coming months. Reuters also reported that Tesla cut the delivery time for Model 3 and Model Y cars. Wrapping things up, Advance Auto Parts reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the annual Bloomberg New Economy Forum underway in Singapore brings together global leaders. They're talking about global issues. And at the event, several well-known individuals from the financial space, including Citadel's billionaire founder Ken Griffin and Skybridge founder Anthony Scaramucci. Some of these guys catching up with our own Eric Schatzker. As for Griffin, he had some thoughts talking to Eric about former President Donald Trump's plans to possibly run again. Check it out.
So now you talk about the battle for the White House. DeSantis is going to run on a record of just unbelievable accomplishment and a record of having brought the people of Florida together in a way that they're incredibly proud of the state that they live in.
The question
the Republican Party is wrestling with is, should it unite, if you will, behind DeSantis now, or should it let the Trump-DeSantis rivalry play out, possibly, in a battle for the soul of the party that potentially puts it at a disadvantage relative to the Democrats 2 years from now?
So we all have this sort of fantasy that these decisions are made by people in these back rooms. I haven't found that room, and I don't know those people. So in the United States, in both parties, the people that are running for the office of the president, they're on a mission on their own. And they're going to do what they're going to do.
The process has to play out.
The process has to play out. Now, I really do hope that President Trump sees the writing on the wall. He lost in 2020. We lost Georgia because of his behavior in the Senate race in 2020. That's a second loss. And then this year, the Republicans lost the Senate because the Trump-backed candidates in the Senate races were rejected by American voters. That's a three-time loser. And I'd like to think that the Republican Party is ready to move on from somebody who's been, for this party, a three-time loser.
All right, that, of course, was Citadel founder and CEO Ken Griffin talking with Bloomberg New Economy editorial director Eric Schatzker at the Bloomberg New Economy Forum underway in Singapore. We do want to point out that this was a conversation done earlier today over in Singapore, so obviously before all of this news about Poland.
4:20 a.m. in Singapore on Wednesday right now, so we woke up to these conversations. Well, speaking of conversations, we also heard from Anthony Scaramucci, a former White House communication director for President Trump. He spoke about his relationship with Sam Bankman-Fried and what he thinks happened to FTX. And we should note some news just crossing the Bloomberg terminal about Sam Bankman-Fried of FTX, saying that we should note he's facing a possible trip to the United States for questioning. Let's hear what Anthony Scaramucci had to say about his investment, Sam Bankman-Fried's, that is, investment in Skybridge Capital.
He was raising capital. His narrative, which was unfortunately made up, but his narrative was that he had $1 billion in cash. He wanted to raise another $1 billion. He wanted to fortify his businesses, and he was buying distressed in crypto, sort of to shore up the industry. And so we embarked upon a Middle East trip to Riyadh, Dubai, and Abu Dhabi. And listen, I've been doing this longer than Sam has been alive, and so I have a lot of relationships over there, and I availed him to a lot of those relationships. And I think what happened, frankly, is he said something about CZ, the founder of Binance, in possibly one or two of those meetings. It got back to CZ. He got super upset about it and said, okay, we're in a divorce. We're not going to make love. That was the Twitter comments, right? And he hit him with about $500 million worth of FTT tokens. And I don't think Sam could keep that token at a level that would support all of the infrastructure and the leverage that he had on his balance sheet. And so we saw a collapse. So weirdly, the association with us and the trip to the Middle East sort of tipped the first domino a lot earlier than maybe that domino would have been tipped otherwise.
That was Anthony Scaramucci of Skybridge Capital at the Bloomberg New Economy Forum in Singapore on Tuesday, talking about his relationship with Sam Bankman-Fried and what he thinks happened to FTX. We should note that Stacey Marie Ishmael, the managing editor for crypto here at Bloomberg, she began her interview with Anthony Scaramucci by asking him specifically about FTX and Sam Bankman-Fried's investment or purchase of 30% of Skybridge. Scaramucci did say that he's hopeful that he can work with bankruptcy attorneys and others who are handling the bankruptcy to actually buy back that portion of Skybridge. He did say that he had the opportunity to sell the whole thing, but he didn't want to, and he didn't want to get FTT tokens or an investment. He was part of the deal.
So you mean he wanted cash?
He wanted cash, and he got cash, although he did say that part of the deal included a $10 million investment in FTX through those FTT tokens.
Yeah,
so that they can write down to zero.
Yeah, it's just fascinating, kind of the relationship, and just what a great moment to have Scaramucci at NEF to kind of talk about FTX, because he certainly, has a relationship or has had a relationship. What's interesting is, and I'm sure as NEF continues over in Singapore, they'll have some thoughts on what happened in terms of the Russian missiles, 2 Russian missiles that went into Poland, killing 2 people. So I'm assuming some of those conversations overnight, we'll hear from that, and we'll see what those leaders have to say.
I do encourage everybody to check out our coverage from Bloomberg's New Economy Forum happening in Singapore. for. You can check out all the coverage at Bloomberg.com and, of course, on the Bloomberg terminal as well. The entire interview, even though we just played clips from both of those, Citadel founder and CEO Ken Griffin and also Anthony Scaramucci of Skybridge Capital, worth watching both of those interviews in full.
Yeah, what's interesting, Ken Griffin, speaking of geopolitical, talked a lot about the U.S.-China relationship in particular and the limitations that the U.S. has put in terms of concerns about U.S. technology going over to China. So he really got into that. And one of the quotes he said is, we're playing with fire here when it comes to kind of reining in China and having access to technology. Anyway, as Tim said, check out those conversations. You can find them on the Bloomberg terminal and at Bloomberg.com. All right, you're listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, everybody. You are listening and watching Bloomberg Business Week on this Tuesday, November 15th. Carol Master along with Tim Stenovic. Coming up.
We're going EVs, Carol.
Yeah, why not, right?
Why not? We got to do our weekly EV segment.
We are. We're going to get to that in just a moment. Some news from GM, or at least anticipated later on this week. In the meantime, let's get back to the markets and the trade. Here is Charlie Pell.
Hi, thank you very much, Carol Master. Stocks higher across the board. 28 minutes to go ahead of the close, with the S&P right now up 32 points, up 0.8%. We have got the Dow Jones Industrial Average up now by about 0.1%, higher by 33 points. Nasdaq up 167, a gain there of 1.5%. 10-year yield 3.79%. The 2-year right now 4.36%. Stocks are being led higher by a rally in tech shares as data adds to evidence inflation may have peaked. Right now, the Nasdaq 100 index is up by 1.5%. American and Bahamian authorities have been discussing the possibility of bringing Sam Bankman-Fried to America for questioning. This, according to 3 people familiar with the matter. Those sources say the conversations between law enforcement officials in the 2 countries have intensified in recent days as they probe his role in the implosion of cryptocurrency firm FTX. Stocks are pushing higher with 2 positive data points on inflation. Where does this now leave the Federal Reserve? That question this morning for Joanne Feeney, a partner with Advisors Capital Management.
My concern is people should just be aware that there's a reasonable chance that some of the Fed speakers are going to come out and say, don't discount the fact there's a lot more work to do to bring inflation down. We're going to have to continue to raise rates, and we're going to be paying attention to the data. These are just 2 data points. There's a lot more work to be done from the Fed.
And again, we've got the 10-year yielding 3.79%. Spot gold up 0.4%, $17.79 the ounce. Bitcoin up 2.3%, $16,756. West Texas Intermediate crude up 1%, $86.78 for a barrel of WTI. Bonus season looking grim on Wall Street. Year-end incentive pools are expected to drop sharply across the finance industry amid a pullback in mergers and acquisitions, persistent inflation, and the threat of a potential recession. Among some of the big banks, we've got Goldman Sachs up 0.2%, Morgan Stanley up 0.6%, JP Morgan Chase down 1.1%, Citigroup down 0.3%, Bank of America down by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. Charlie, talking about the overall trade, highlighting some stocks. General Motors was up 3.6% at its highs today, still up about 0.7%. And this is certainly one of the stocks that we're watching.
Yeah, we're talking about these because it's time for another edition of Bloomberg Plugged In. It's your weekly look at EVs, brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information.
All right, so the reason we're talking about GM is our own David Welch has a great story about the company getting ready to tell investors something big when it comes to their EV program. So on it is our Ed Ludlow, West Coast correspondent at Bloomberg News. He's in our 960 studio in San Francisco. Hey, Ed, good to have you here. GM, they have been leaning in big time when it comes to electric vehicles. They do have an investor meeting later on this week. What are we expecting?
Yeah, so David Welch, fantastic reporting from our Detroit bureau chief. And it's a really interesting one. There's 2 ways of looking at it. Sources say GM's going to announce it will be profitable on its EV program from 2025, the same year, according to sources, that it will build 1 million electric vehicles. But the other side of the story is this is kind of a reality check, right, of how far away GM is from making profit on EVs. And it reminds us it's in this transition where it goes from making combustion engine vehicles with good margins to EVs, and that's going to take time. It's a process.
How do the margins look on those EVs, Ed?
Well, even from 2025, when they're profitable, not great. And the reason being that the strategy for GM is very much to take the profits, the initial profits from that EV business and put them back into R&D. You know, you have to remember they're kind of at this nascent stage now where they might sell 44,000 EVs this year, but those are like small volumes, mostly from the legacy Bolt product and then the Cadillac Lyriq and the Hummer EV pickup, which is very exciting, but it's modest volumes. The other big part of the story is their next generation of battery platform, Ultium, which they're currently building, Lordstown, Ohio, but in very small volumes as well. And that's a big part of what they're pegging their future on, this next generation battery tech.
And how much of this is going after Tesla, which is safe to say, and you know, very clear that they had the first mover advantage when it comes to the EV market. There's a lot more players now. Is GM specifically trying to go after Tesla here?
Well, a big part of the story, and this is what our sources are telling us here at Bloomberg, is that this is supposed to be fighting talk from GM, that they really see a future in which they are a leader in electric vehicles. Whether they are the leader rather than a leader remains to be seen. The gap is still really big on whichever metric you choose, whether it's the vehicles that have been delivered or it's the financials, right? Last year, Tesla, which only makes electric vehicles, had $5.5 billion of net income. It's forecast to have almost $19 billion of net income in fiscal 2023. GM is nowhere near that, of course, in getting that kind of level of earnings from its electric vehicle offering. But it's certainly its ambition, and it's certainly committed to putting the profits it gains in the early stages to growing its footprint even more.
Hey, Ed, how would you characterize GM's transition to EVs right now from an investment perspective? We know that, as you mentioned, internal combustion vehicles are more profitable, and the company's still investing in building those vehicles. But how would you characterize the spend when it comes to investment?
Aggressive. You know, GM has poured money into product development, you know, bringing a lot of vehicles online quickly. You know, this is not just a case of GM saying, okay, we're going to do one or two models. They're starting with the Hummer EV pickup and the Cadillac Lyriq SUV, but actually next year it all picks up pace when they have the Silverado EV and a broader offering. But they have many models planned, right? We're talking tens of billions of capex.
Ed, is that Silverado supposed to compete with the Ford F-150 Lightning?
Exactly. You know, like, let's be honest, we're largely talking about North America, where the bigger, bulkier cars are king. The pickup is sacred in this nation. The Ford F-150 or the F-Series is the bestseller. So Ford did what makes sense. They made an electric version of it. And the early signs are that demand for the F-150 Lightning is great. GM is moving to counter that and bringing in the Silverado EV pickup. Trying to kind of lean into one of their best sellers and compete in a market in which they're strong, but they're in a really fierce battle with GM. And we haven't even talked about Cybertruck. You know, at some point, Tesla comes with its own futuristic-looking pickup, and then you have to ask the consumer, where do your loyalties lie?
But you do think about, right, if you can get a mass-market EV out there, maybe they can't match Tesla price-to-price General Motors, but if they can sell a ton, Ed, and they've got great margins, just 10 seconds, that's a pretty profitable vehicle.
Yeah. The story is Tesla's no longer the only game or name in town.
Right.
Consumers have choice. How loyal are they to their historic buying?
All right, great stuff. Ed Ludlow, thank you so much, West Coast correspondent at Bloomberg News. All right, off to D.C. and World and National News with Ann Mastu. Hey, Ann.
Hey, Carol. Hey, Tim. Kevin McCarthy has cleared his first test in his bid to become House Speaker, winning the Republican vote, but it is a long slog ahead to quell opposition. And as we've been reporting, a senior U.S. intelligence official says Russian missiles have hit Poland, killing 2 people. The Polish government has not yet confirmed the information, but says top leaders were holding an emergency meeting. Russia denies the reports. Former President Trump is expected to launch his 2024 presidential campaign tonight from Florida, even though many Republicans and donors are asking him to reconsider or at least wait until the Georgia Senate race is totally settled. Details from Bloomberg's Amy Morris in Washington.
One problem, Republicans say this is bad timing. Candidates endorsed by Trump lost key races in last week's midterm elections, and that cost Republicans their chance to reclaim the Senate. Still, Trump intends to move ahead with his plans for a third White House run, even as more Republicans abandon him for other candidates, notably Florida Governor Ron DeSantis. We'll carry Trump's announcement live tonight, starting at 9 Wall Street time on Bloomberg Radio and television. In Washington, I'm Amy Morris, Bloomberg Radio.
Thanks, Amy. The Homeland Security Secretary is getting grilled over the handling of the U.S.-Mexico border. In a House committee hearing, Republicans pressed Alejandro Mayorkas over the record 2.2 million migrant arrests at the border in fiscal year 2022. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Mostu. This is Bloomberg.
All right, Ann Mostu, thank you so much with World and National News. So, got a couple stories we want to bring to you, both very relevant to what's going on today. This one from Berkshire Hathaway's Charlie Munger, as you know.
Not a big fan of crypto.
No.
You could say.
But best buddy.
Not a hodler, as you could say.
Best buddy, though, of Warren Buffett.
Yeah, he said that he's doubling down when it comes to criticism of digital assets. This in the wake of FTX's collapse. He did not mince words. Here's what he said, okay? Quote, "It's partly fraud and partly delusion," he said on CNBC on Tuesday. Quote, "That's a bad combination. I don't like either fraud or delusion, and the delusion may be more extreme than the fraud," end quote.
He's 98 years old. He's a billionaire. He's long been, as Tim mentioned, a critic of Bitcoin, previously calling it, quote, "stupid and evil." He has also previously urged cryptocurrencies to be banned. And I got to say, his thoughts and view look pretty good this past week, considering the crisis and the undoing, if you will, of FTX Group and its bankruptcy that may involve more than 1 million creditors.
Well, speaking of FTX, we talked yesterday about the cryptic tweets that we saw from Sam Bankman-Fried. He's continuing to add to those tweets. A story by Alex Milson on the Bloomberg Terminal writes that he might have lost his company, his wealth, and his credibility, but former FTX CEO Sam Bankman-Fried is not shying away from the spotlight. A series of cryptic tweets spelled out the words "what happened" over the last 24 hours on Bankman-Fried's account. The first tweet was posted Monday, and it simply read "what," and it was followed by the word "happened" in capital letters, tweeted out one character at a time, a little over a 24-hour period.
We were following it in real time.
Yeah, I saw it for the first time Sunday night, and then, late yesterday, I was
Yeah.
following it as well. And he's continuing to add to it today.
Yeah, he finished with the message, quote, "not legal advice, not financial advice. This is all as I remember it, but my memory might be faulty in parts."
In an interview with the New York Times shortly after the initial two posts were sent, Bankman-Fried said, quote, "It's going to be more than one word. I'm making it up as I go." And the interviewer asked if he was, quote, "planning a series of cryptic tweets." He replied, "something like that."
All right, well, maybe authorities might have something to ask about that, because American and Bahamian authorities have been discussing the possibility of bringing Sam Bankman-Fried to the United States for questions, according to 3 people familiar with the matter. This is a most read story and a Bloomberg exclusive as we speak. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got just about 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ 100 index all holding on to gains. Right now we have got the S&P up by 1%, just below 4,000 at 39.95, higher today by 38 points. The Dow is up 106, higher now by 0.3%. NASDAQ is up 171, up 1.5%, while the NASDAQ 100 index is also gaining 1.5%. Stocks are being led higher by a rally in tech shares as this morning's data added to evidence that inflation may have peaked. 10-year yield right now 3.78%, with the 2-year yielding 4.35%. Spot gold up 0.5%, $17.79 the ounce, while West Texas Intermediate crude oil is up 1%, $86.72 for a barrel of WTI. So again, recapping here, stocks higher ahead of the close. S&P up by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. It is 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Incoming Israeli Prime Minister Benjamin Netanyahu is forming a government that may well be the most radical in Israel's history. Having alienated other right-wing figures during his previous stints in power, Netanyahu is now dependent on a far-right bloc known as religious Zionism. Yet indulging that bloc's most extreme demands would be deeply corrosive to Israel's democracy and its international standing. Netanyahu needs to limit the sway of firebrands in his cabinet and condemn inflammatory and bigoted rhetoric. He should also attempt to repair relations with more mainstream conservative parties so that he might eventually broaden his coalition and dilute religious Zionism's influence. There is no way to preserve Israel's Jewish and democratic character without one day establishing a viable Palestinian state. However far off that prospect seems now, neither side should be taking steps that drive it even farther away. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 10 minutes left in today's trading session. As you know, we've been bouncing around watching that news of those stray Russian rockets that went into Poland, killing 2 individuals. So that's something we want to get into with our next guest.
We got Anton Schutz with us, President and Chief Investment Officer
In
at
the
Hendon
studio.
Capital Advisors. He's with us in the Bloomberg Interactive Broker studio. Anton, it's good to see you because I've been doing this for a couple of years, and we've gotten to speak many times, but we've never actually gotten to meet in person, so it's good to see you. I wanted to talk a little bit about what Carol mentioned and with the sell-off that we saw a little after 1:30 today in the wake of those reports from the Associated Press that cited an official saying that we did see 2 people killed in Poland as a result of Russian rockets. Talk a little bit about your impression of events such as these on the markets, because we're seeing a little bit of a recovery in the S&P and NASDAQ right now.
Yeah, I mean, look, at the end of the day, I feel terrible. A couple people got killed. It's terrible that a missiles landed in a NATO country, right? That's what the first fear was. Oh my gosh, are we going to launch? What are we going to do?
Right.
I suspect when we look at the end of this that there was an apology issued somewhere in back channels, and there was a mistake made, and maybe their missiles aren't so good. I think we have to hope their missiles aren't so good. But, at the end of the day, the markets really want to go up. And to the markets, the most important thing were the inflation figures.
Well, and let's talk about that. And because the PPI report, right, we have starting to see what feels like we've hit peak inflation, things starting to come down. How do you see it, and what does that mean in terms of rate policy in your view? And that certainly impacts the financial sector.
Well, what's driven me and other analysts nuts is the fact that we all kept saying the Fed's got to tighten, the Fed's got to tighten, Fed's got to tighten, and they kept easing into everybody saying that. And now they've kind of gone the other way, maybe too hard, too fast, because there's such a lag behind these moves. These are big moves. I mean, 75 basis points at a clip. I mean, they only started tightening in May. So,
Right.
you know, I think you got to let some of that take place and work its way through the system. And that hasn't happened yet. So I wish they would just sort of, you know, excuse my lingo, slow their roll. But, you know, let's do 25 at a time and just see. Take it easy.
But we're still pretty high when you
Yeah.
think about, you know, where we are year over year. PPI numbers, final demand, let's see, it's like 8.3%, ex-food and energy 7.2% year over year. Oh, that was estimates.
Those were estimates, yeah.
8% was final demand, and then 6.7% was ex-food and energy year over year. Still high rates.
Oh,
still
no,
numbers.
I'm not suggesting we don't have a problem. I'm just suggesting take a little more cautious approach because, you know, think about what's happened to all these countries around the world where we've crushed their currencies. Obviously, there's been a bounce back in the last week because, okay, maybe we slow it down, but we've crushed economies around the world. It's not just our own demand destruction that we've done here. So I worry about a policy mistake, and I just wish they would, you know, just kind of ease into it a little bit more. I'm not calling for them to cut rates, but, you know, let's not do 75 at a clip.
What's the policy mistake you see happening? Obviously related to rates rising too quickly, but I mean, what's the effect of that?
Well, I mean, you know, the real effect is businesses and you know, failing and people losing jobs. And, you know, they've got a dual mandate, obviously, and that's for sure. And inflation's, you know, really does a lot of damage, particularly to, you know, lower income people. So they do have to deal with it, but they don't want people to lose jobs on top of that. So it's a challenge.
Do you think the Fed can bring inflation under control without people losing jobs?
No, people are going to lose jobs. You know, that is a cost, and that's a painful one. And at the end of the day, you know, look at real estate, right? I mean, what are cap rates going to do?
Yep.
And especially what are cap rates going to do combined with all this work from home? Do people need as much commercial real estate?
Anton, what's the sweet spot when it comes to rates and the financial sector, banks specifically? And look at the KBW Bank Index. Since mid-October, about October 12th, they're up about 13% overall. So we've seen a bounce back. Higher rates, we typically talk about being good in terms of what banks can lend out, what they can, you know, what they're paying deposits. What is, though, the sweet spot when it comes to the Fed and rates?
Well, I mean, first of all, zero was not it.
Right. We know that.
And you really don't, you know, the fine line is you don't want a lot of bankruptcies. You don't want companies failing. You don't want credit to become a problem. Credit's getting back to normal, right? We're probably at a level where credit's normalizing, and that's fine. I mean, banks lend money, and they're supposed to lose some of it. Right. I think there's been bad practices outside the banking industry. You know, banks have been very cautious. They've obviously learned their lesson during the great financial crisis. A lot of the bad actors are gone. And if you think about the products, there's no negative AM mortgages. There's none of the crazy stuff, the piggyback 125s, and other things that cause people to lose a lot of money. That's not there. But a lot of the private lending markets,
that's what I wanted to get to.
Yeah.
I'm a little worried about the private markets and what might be going on.
And you should be, because, you know, there's not the same discipline, it's not the same history. The mandates aren't the same, and maybe the capital isn't the same behind those loans. So, yeah, you do have to worry about that. And then you have to worry about linkages to the financial system. I mean, look at what the financial system's absorbed here with this collapse in crypto.
Yeah.
I mean, we've lost over $2 trillion of value in crypto, and really all we've hurt are the crypto exchange. I mean, a lot of people have lost money. I mean, I feel terrible for them, but, you know, it hasn't broken the whole financial system.
That's kind of like by design. We didn't see established banks investing in crypto the way that private companies have. I would say this is a feature, not a flaw.
Yeah. Well, no, I think that's, I mean, if you talk to the regulators, and they're not going to say much in public, but if you talk to them offline, I mean, you know, they're not giant fans of it. And the reality is, you know, who knows what that's worth? I mean, I've been around long enough to invest during .com. Saw that. You know, and by the way, after .com, you know, value worked. And,
right.
And here we are again, seeing a lot of really high-priced stocks breaking. Not today, but, you know, value is starting to work again. Small caps are starting to work again. So I think that people are starting to look for things that actually pay dividends and have real value.
I know we usually ask for names, but I know you were at a FinTech Innovation event here in the city, right?
Yeah.
So I do wonder, like, with what's happened with crypto over the last week and the concerns, and it was a second crisis that we've seen really this year in terms of the crypto market. What is FinTech Innovation? What is it looking like? How are you thinking about it, especially as you look to invest potentially in it?
Sure. Well, you know, on the venture side, we're looking at things that help banks, right? The things that make them more efficient, make their compliance better, you know, create payment rails. I mean, there's so many ways that you can reduce costs in the banking system. There's a lot of good innovation going on out there. The fintech that's gotten all the press is the lending side, and that lending side, building a better credit mousetrap. Well, how many years of data do they have? Obviously, you got a whole new generation of people, and we had all this stimulus. So is any of the data you were looking at any good?
So like a company like Chime, for example, which we just saw do layoffs, are these going to be around? Are they going to take on the established players just in 20 seconds?
Yeah, I mean, they've got issues, and valuations are still stretched for a lot of those players. There will be consolidation. It's going to take a lot lower valuations to create consolidation there.
We'll come back soon. It was so much fun to have you back in the studio. Anton Schutz, thank you so much. President and Chief Investment Officer at Menden Capital Advisors, joining us here in our Interactive Broker studio. Be well.
Always a pleasure. You too.
We'll see you soon. All right, folks, just a few minutes left in today's trading session. It is time to head over to our TV team for Beyond the Bell, our cross-platform market coverage on radio, TV, YouTube, and Bloomberg Quick Take. We are counting you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Taylor Riggs. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. And we're joined right now by Carol Master and Tim Stenovic, and we welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take to parse another wild day in the markets. A day that still looks like it's going to end with U.S. equities solidly in the green.
Yeah, and if I look at the S&P 500, I mean, we're still trying to assess, a lot to still be known in terms of those Russian rockets in Poland and what are the consequences, or what longer-term consequences, if any, will result. But if you look at the S&P 500, most of the names in the index, the majority of the names, Tim, are higher today. So investors moving back to that risk-on trade.
Yeah, it's kind of what Anton Schutz from Menden Capital Advisors, he's president and CIO there. He just joined us live in the studio, and he said that the markets really want to go up, and the market, the most important thing was the inflation figures this morning, the geopolitical headlines that we got earlier in the day, notwithstanding. He said that it's those inflation numbers, that PPI print, that is most important.
Interesting. I think one thing that we haven't talked about today either, Romaine, or the call from JP Morgan's Marko Kolanovic finally getting out of that big overweight on equities. And I also think that B of A fund manager survey, again, another really interesting story that we haven't gotten to, where, Tim, to your point, 85% see inflation finally declining in the next 12 months.
And that survey was done before the PPI print came out. So there's another, quiver that they can.
It's going to come down eventually.
See how many people in that survey were still net
cash.
Yeah, it's still net cash here. So interesting dichotomy, but it shows just how much sentiment is shifting both to the upside and in some cases to the downside. You put it all together, at least here on this day, you're going to get green on your screen. A Dow Jones Industrial Average up by just about 0.2% as we wait for these numbers to settle. The S&P having a much better day, up about 0.9% on the back of most of those big cap tech names rallying, including Alphabet, Apple, as well as Nvidia and Tesla. Walmart higher as well. The NASDAQ Composite up by 1.5%, Carol, and the Russell 2000 also going to finish the day higher by about 1.5%.
All right, and something we didn't get to mention earlier, but I like to go there. Those Chinese names that trade here in the United States, they were up another 8% in today's session. We have seen a tremendous rally, more than 20% over the last, 4 days here, as optimism continues to grow over kind of the backdrop, if you will, Taylor, of what's going on in China.
Yeah, really interesting, Carol. Take a look at where we are, sort of two sectors underneath those main headline indices of where we are for the winners and the losers. There is actually a little bit of green here on the screen. Let's start with the winners. How much of this was a little bit defensive? Food and staples and some of those consumer durables. I know that we're looking at you, Home Depot and Walmart, for some of those. Otherwise, some of the semiconductors and media entertainment companies, those are also up more than 2% on the day. Come to the bottom of the screen. There was a lot of green, even in the, quote, worst performers, but a few sectors as well in the red today. A lot of it is telecoms, transportation, and some of this hardware equipment makers here, Carol. But really, it was sort of a bullish day underneath the surface.
Yeah, an interesting day, right, where the tone all of a sudden in a heartbeat changed dramatically, but then kind of bounced off those lows, and investors kind of went back to the trade that we saw for the majority of the day, at least earlier in the session. All right, so gainers kind of had a lot to choose from today. A lot of great company and stock stories. Walmart, among them, you guys have been talking about it. We've been talking about it. Third quarter profit surpassing Wall Street projections. The retail giant also raising its full year guidance. Stock was up about 6.5% by the close today, really showing some resilience as U.S. shoppers were seeking out some of those bargains, even amid all of that inflation that is still continuing to be out there. I love.
Can I just stop on Walmart? I was just taking a look at the data here.
Sure.
Walmart now actually on a year-to-date basis is now in the green, up 2% here on a year-to-date basis on the back of that rally. I mean, this is a stock that at one point, Carol, was down, I think, what, 20% on the year-to-date basis back in, I think, the middle of June?
Yeah.
So pretty big turnaround for the stock.
And don't you feel like, Romaine, it's been a year where we've had multiple years in it in terms of market trades? Like there's been bullish sentiment, there's been a very negative sentiment, a lot going on here. All right, let's get to another gainer, New Holdings. We're talking about a ticker NU. This stock was up as much as 20% in today's session, finishing the day with about a 13% gain. It's a Brazilian digital lender that counts Warren Buffett's Berkshire Hathaway as a backer. This company soaring after posting a surge in third quarter profit and revenue. So really big out. I got to say, Morgan Stanley had a note out there. They said it's well positioned to build one of the largest and most valuable banking franchises in Latin America. So very bullish sentiment on that one. And then Paramount Global, PARA, this was top among the S&P 500 gainers, up more than almost 11% at its highs, finishing the day with about a 5% gain. Again, going back to Warren Buffett, Berkshire Hathaway buying an additional 12.8 million shares. They now have a 15% ownership stake, according to the SEC filing.
Berkshire, I'm just saying, Berkshire having a pretty good day between this, Nubank, Paramount, and then, of course, the Taiwan semi-news that we had a little bit earlier here, which was up about 10, 11% on the day.
Munger talking about crypto, how much he loves it.
Is that what he said?
No.
I said
he
this
doesn't
earlier.
love it at all.
Munger, not a hodler, if you listen to his comments when it comes to crypto.
He's not all in on crypto.
Hey, Carol, you said it was easy to pick gainers, not so easy to pick decliners today. Do you want to start with some standouts, though, at the bottom of the S&P 500, at least on a percentage basis? Capital One Financial falling, this after the credit card company posted October charge-offs and delinquencies that worsened from a year ago period, so a little concern there. Bank of America analyst cutting his rating to neutral, and he trimmed the price target to $113 from $124. Shares falling more than 7%. And
was that data coming out of Capital One, or that's what the analyst sort of?
That's what the analyst said.
Oh, okay,
yeah, that's what the analyst said. And look, I mean, a decline of 7% just from that one note. So
biggest decliner in the S&P.
Yeah, and Albemarle up there as well, down 6.5%. Lithium-exposed stocks dropping today following a sell-off in Asian peers amid worries over potentially weaker demand coming from Chinese firms. And then Winnebago Industries, this is an interesting one. The company having an investor day today.
You have a Winnebago, right, Romaine?
Yeah, I do. My neighbors love it. I take up 6 parking spots.
Where do you park that thing in Manhattan? That's what I want to know.
Yeah, right next to my Hummer.
The company, though, said that they're seeing a softening demand when it comes to fiscal 2023. That concerning investors. Talking about a recovery, though, fiscal 2024 seen as stabilization in the RV market, and then a return to growth when it comes to fiscal 2025. How do you see that far out?
I think it'd be great if we can get the Bloomberg approved Winnebago, and all four of us can just get in there and do our show on the road.
Well, maybe this summer
only
we can go across the country.
Only if I can drive and you can be in charge of the music. Can we do that?
There's enough road. We can all take turns driving.
Carol can drive. Carol's from New Jersey, so I don't believe that at all.
Can even drive a manual. Go figure.
Carol, remember what I say?
What?
When in doubt, go to bond yield.
We're getting the T-shirts printed up as we speak.
When in doubt about the future direction of where we are on this show, go to bond yields. It certainly was a flight into full faith and credit. And Carol, I think it's an important distinction that you saw this before some of the big headline news that we got around 2 p.m. and those, at least what we're hearing from the Associated Press, strikes on Poland. But really coming off of those PPI print this morning, better than expected, and by that we mean lower than expected. Bond yields had really done a flight to quality, but a little bit of that extended. A 5-year yield that's now down 10 basis points on the day. And you see that back in the 10-year yield. So now, finally, within 5s and 10s, you're back below 4% on those handles. So really interesting, the flight to quality that we've seen back into full faith and credit.
Yeah, I mean, look, and we talk about here, you did stump me here. I mean, but, when in doubt,
He's
we go.
thinking about his Winnebago.
No. When in doubt, you go to bond yields. When in doubt, you sort of push ahead here, I think, to what traders are really going to be looking at, too. I mean, we kind of glossed over it, but I think the earnings that we got out of Walmart, and you mentioned this on your board there, certainly important. We're going to get Target tomorrow. We had Home Depot this morning. That was a little bit of a different story, and we're going to get Lowe's. So it'd be interesting to see not just whether people are spending, but where they're spending and how they're spending it.
Well, you're talking about the retail sales number.
I do want to say, speaking of people, how people are spending, I do want to make a quick correction to something that I said. Capital One actually did post those charge-offs. I should note for October, 2.93% versus 1.04% year over year. The interpretation, of course, coming from the Bank of America analyst.
Gotcha. Carol, you had something to say?
No, but retail sales tomorrow at 8:30. So this is going to be important, right? The more we know about what the consumer's up to, right, Taylor, and how strong they can continue spending or what they're spending on. They're obviously continuing to deal with still inflated inflation numbers. So consumer, so important to our economy. So it's always good when we get a check there.
Yeah,
and we did with Walmart and some of the other ones.
Yeah, well, and with Walmart, I think it was interesting. I wonder if we can push this forward to tomorrow. We talked a lot about inventories, but how much of that was nominal versus people just not buying? And the nominal goods inflation that you saw, that was part of the increase year over year based on that balance sheet. So certainly something to keep in mind.
What I found pretty striking about those results this morning, Taylor, were the higher income consumers shopping increasingly at Walmart. The company said almost 3/4 of Walmart's market share gains in grocery came from shoppers with household incomes over $100,000
and they're really
a year.
benefiting from that increased market share.
But then again, you go back to what Tim was talking about with Capital One. Are we going to start to hear more about this? We know credit card balances have been rising here. The question isn't just the capacity for consumers to spend, but whether it catches up with them at some point if they're doing it on credit.
Exactly. So this is going to be really important. All right, guys, that's a wrap. Our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Quick Take. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, you are listening and watching Bloomberg Business Week on this Tuesday. Retail sales numbers, 8:30 a.m. Wall Street time tomorrow. That'll be important. But as we were just talking about, Walmart, having a pretty good day. And I thought that was a great point that you said.
It's
about
incredible.
Higher income shoppers, basically, right?
It makes me think of Costco. I mean, you remember that New York Times profile of Costco, a dozen years ago, that talked about the wealthy shopping at Costco. And I wonder to what extent people are now starting to see Walmart as one of those places.
I always thought of Costco, though, as more higher end in terms of the big box retailers.
Yeah, it absolutely is.
Right. In terms, so it's
with the demographic that it attracts.
Right.
Is that happening at Walmart now too?
Well, I mean, this is where the detail, right? We talk about consumers trading down, right? We've talked about this with some of the CEOs that we talked to. We talked about with L'Oreal yesterday. Like, are we seeing any signs of consumers potentially trading down because they're dealing with, limited pocketbook and figuring out how to spend it?
All right, more to come on all that and more. First, though, a check of the latest world and national news. For that, we go to Ann Mostu in the newsroom. Hey, Ann.
Hey, Tim. Hey, Carol. A Russian missile reportedly landed in eastern Poland, as we've been reporting, killing 2 people. However, the Pentagon is not confirming reports at this time, but is looking into it. Poland is a member of NATO. Goldman Sachs paid out well over $12 million to a former partner who complained internally about a toxic workplace for women. Bloomberg breaking this story today. The bank settled with the departing partner 2 years ago. The confidential payment is likely among the largest of its kind on Wall Street. It remains an open question whether Republican leader Kevin McCarthy will have the votes to become Speaker. Today, he comfortably survived an internal vote to remain the Republican leader and become the nominee for the top post. Now, McCarthy will need at least 218 votes among all members of the House of Representatives to actually become Speaker. Lawmakers say they could raise or suspend the debt limit during the lame duck session, and Democrats are hopeful it will be a bipartisan effort. Details from Bloomberg's Amy Morris in Washington.
The Bipartisan Policy Center estimates lawmakers likely have until sometime in the third quarter of next year to extend the U.S.'s borrowing authority. Some members want an agreement now rather than relying on negotiations in the next Congress when Republicans will likely have the majority. To do that, they'll need support from all 50 Senate Democrats. Senator Joe Manchin has already said he opposes any partisan debt limit deal, and that's enough to spark bipartisan talks. In Washington, I'm Amy Morris, Bloomberg Radio.
Thanks, Amy. And Florida Governor Ron DeSantis is not saying much about former President Trump ahead of his expected announcement of a third presidential run. That's happening at 9 p.m. We'll be carrying that live on Bloomberg TV and radio. Global news 24 hours a day. This is Bloomberg. I'm Ann Mostu.
All right, Ann, thank you so much. So how often do you get into a cab versus like an Uber or Lyft? Do you
I have not gotten in a cab. I got in a cab in the spring. So I would say probably less than 10% of the time.
So not often.
Not often. And, you know, it's a function of usually where I'm getting picked up.
Yeah.
At home, there are no cabs where I live. Like zero
Are there
cabs.
any yellow cabs over there?
So it's funny that you say that. When I first moved to this neighborhood in Brooklyn, we live in South Brooklyn,
Yeah.
There were no yellow cabs. Then we started to see green cabs, which was great. And then Uber, you know, and Lyft came around, and that's really exclusively what you're able to get in these areas. If I'm in Manhattan, I'll try to hail a cab. But the reason we're talking about this is because for a long time, in last couple of years, you've been able to get a better deal on a yellow cab than you have with Uber or Lyft.
Right.
But that could be changing soon.
Yeah, here's the story by our Skylar Woodhouse. New York City taxi riders will see a 23% increase in metered fares following today's vote from the city's Taxi and Limousine Commission. Passengers will also face an increase in rush hour and overnight surcharges and airport flat rates, according to a document released by the TLC. Increase will also affect per mile and per minute rates for Uber and Lyft, making the first raise for drivers, or marking the first raise, I should say, for drivers in a decade.
If you can get a cab from JFK to somewhere in Manhattan at a flat rate, then it's a pretty good price. It's $52 right now. It's been that price since 2012. I kind of chuckle about this article, Carol, because it is tough to get a cab these days. You don't see many yellow cabs around. Uber and Lyft have really put a lot of pressure on the price of medallions, on taxi drivers, taxi cab owners. So you don't see yellow cabs to the same extent that you used to see. It's kind of hard to get a cab.
Have we lost the number of yellow cabs in New York City? I have no idea. I'm looking through this story to see if we have. I'm hearing that several thousand have been foreclosed upon. Apparently, there's 25,000 member union of yellow cab and Uber and Lyft drivers. So that's everybody together. It's a very different atmosphere from how it used to be pre-Uber.
It was all yellow cabs before.
I've been in a couple of yellow cabs recently.
They're great.
Just put your arm up and you hail. That's how it
Get
works.
a cab.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word from Nike that it is boosting its dividend by 11%. Quarterly dividend going higher at Nike. Shares running higher after hours, with Nike up now by roughly 2.5%. The Dow, the S&P, and NASDAQ turned out to be an up day. This after fresh data this morning added to evidence that inflation may have peaked, strengthening the case for the Fed to moderate its pace of interest rate increases. Treasuries also ended higher while the dollar fell. We did see equities rally for most of the session, but reports that Russian missiles landed in NATO member Poland briefly bruised sentiment by mid-afternoon. S&P up 34, a gain of 0.9%. The Dow today up by 56 points, up by 0.2%. NASDAQ up 162 points today, up by 1.5%. 10-year yield 3.76%. Spot gold today up 0.4%, $17.78 the ounce, while West Texas Intermediate crude up 1.2%, $86.88 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bloomberg reporting last week that any way you slice it, this Thanksgiving is going to cost more. I know, I'm so sorry.
You are good.
Price increases for flour and cookies hitting a record high year over year for October. Eggs jumped the most since 2007. Turkey and other non-chicken poultry were up 17%. Expensive.
Well, let's talk a little bit about the way that consumers are adapting when it comes to these higher prices. We got Leslie Saracen with us, president and CEO of FMI. It's the Food Industry Association. It works with and on behalf of the food industry as an organization, an association. Leslie, good to have you with us. How are you?
I'm doing great. Thanks for having me.
Well, it's a really good day to have you. We got Walmart earnings this morning, and we're increasingly hearing from companies and individuals about what they're doing when it comes to higher prices. What are you seeing when it comes to FMI's survey about how consumers are adapting to higher prices?
Well, clearly consumers are concerned about the increase in prices. I think the majority of shoppers indicate to us that they are spending more at the grocery store as compared to what they were spending a year ago. But I think it's important to keep that in perspective as we think through the numbers. Despite the fears about inflation, average weekly household grocery spending is about $148. And in fact, that's down from $161 that they were spending each week at the height of the pandemic. It's higher, of course, than the 2019 pre-pandemic number of $113.50, but it's not as high as it has been in the last couple of years.
So it's interesting. So not as high as it's been in the last couple of years. So I do wonder, I guess we're just trying to assess, expectations. You represent, all aspects of the food supply chain globally. So are your members anticipating that when it comes to inflation and pressure and pricing, does it end up staying high a lot longer than we anticipated? Maybe it's a new normal when it comes to food prices?
Well, I'm not sure that it'll be the new normal. There seem to be some indications that inflation may be sort of leveling off at this point based on the numbers that came out recently for October. But the challenge for the food industry, and particularly for food going into the retail sector, into the local grocery stores, is that is the food once it's at the end of the line. And there's a lot that goes into identifying what a particular food product is going to cost. So it's going to take some time as labor costs settle, as costs related to transportation, packaging costs. There's a lot that goes into identifying what a particular product is going to cost. And it'll take some time for those numbers to settle out and even out, I think.
What are you hearing in terms of the biggest costs from your members right now? Is it food costs have gone up? Is it transportation costs that have gone up? Is it employee costs and labor costs that have gone up? What is the single biggest cost increase for your members?
Well, unfortunately, I think it's yes and yes and yes. All of those costs have gone up. And so I think it would be difficult to identify a single cause of the issue because there are just multiple causes that are going into the equation at this point.
So, it's interesting too, and I guess maybe politics are really front and center right now. Coming off the midterms, we're thinking about the presidential election as we move ahead. What is it that your members want in terms of federal policy?
I think what we are looking for is a little less focus on perhaps increased regulation. As the regulatory environment evolves, and as clearly we're a highly regulated industry, as we should be. But I think trying to balance the need for regulation and the need for businesses to be able to meet their own costs and meet the needs of their customer base, I think that's really what we're about, is trying to make sure that balanced approach takes place rather than just full-blown regulation, no matter the results.
Where do you stand on consolidation in the industry? For example, Kroger merging with Albertsons, for example. What's your position on that?
Well, as an industry trade association that represents the breadth of the industry, we don't usually get very involved in the business decisions that are being made by our member companies. So I can tell you that I don't really have a position on it. Those are individual decisions that each business makes.
So when it comes to looking at, one thing I want to get before you go, and I was just looking for the latest headlines, we've been tracking, Leslie, as you know, the Russian missiles that crossed into Poland, killing 2 individuals. We're still waiting for more information. We saw it play out, though, certainly in the markets. And this, of course, goes back to the bigger geopolitical concerns of the Russian invasion of Ukraine and the impact it has. We've seen the impact on energy markets. We've seen it on the global food supply chain. How do you guys and your members think about that going forward? Does that continue to be kind of a pressure point, at least for the next 6 to 12 months? And just got about 30 seconds left.
I think it is a pressure point. It's something we're watching very carefully, particularly as it affects the availability and the price associated with grains and edible oils and other things that go into manufacturing the foods that are sold here in this country.
All right, we're going to leave it on that note. Leslie, thank you so much. Leslie Saracen, President and Chief Executive Officer of FMI, the Food Industry Association, a lobbying and policy group that really is working on all aspects of the food supply chain. She was joining us via Zoom from Phoenix, Arizona.
Hey, let's get a check of what's going on in the after hours right now. Excuse me, let's get a check on the markets and how things closed. We got the NASDAQ finishing the day higher by 1.5%, the S&P 500 higher by 9%, and the Dow higher by a little more than 0.1%, Carol.
Yeah, a little bit of a swing, as we know. We all saw it in the newsroom around 1:30 or so when news of those Russian missiles going into Poland and killing 2 individuals. Still waiting for the world to really assess the entire situation. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I don't even want to say much because I really can't wait to bring in our next guest.
Okay, then don't say anything. It's just a great next guest, the author of a brand new book. And that's all we're going to talk about.
Very prolific, knows Wall Street. I've given a few hints. All right, we're going to bring in Bill Cohen in just a moment. First up, though, let's get back to the markets, how the day ended up. Hey, Charlie.
The way ended up higher. We got a number of breaking news headlines to pass along to you. First of all, Estee Lauder is buying Tom Ford in a $2.8 billion deal, a topic we have been talking about yesterday, perhaps as well last week. This according to Dow Jones, but again, repeating the headline, Estee Lauder said to be buying Tom Ford now in a $2.8 billion deal. Moments ago, we got quarterly earnings out of Advance Auto. It reported adjusted EPS for the third quarter that missed the average analyst estimate. After hours, that stock driving lower, down now by roughly 6%. Nike also announcing that 11% boost in its quarterly dividend. An update for the Dow, the S&P, and NASDAQ today, with the S&P gaining 34 points, up by about 0.9%. Equities rallied for most of the session, but reports that Russian missiles landed in NATO member Poland briefly bruised sentiment in the mid-afternoon. The Dow today up 56, up 0.2%. NASDAQ up 162, a gain there of 1.5%. 10-year yield 3.76%, 2-year 4.33%. Spot gold up 0.4%, $17.78 the ounce, while West Texas Intermediate crude up 1.3%, $86.96 a barrel. Spot gold again up 0.4%, $17.78 the ounce. Anton Schutz is the president of Menden Capital Advisors. He was our guest right here on Bloomberg Business Week, and he made the case for value stocks.
I've been around long enough to invest during .com. Saw that, and by the way, after .com, value worked. And here we are again seeing a lot of really high-priced stocks breaking. Value is starting to work again. Small caps are starting to work again. So I think that people are starting to look for things that actually pay dividends and have real value.
Seemingly out of nowhere, an ETF tracking the fortunes of Wall Street has been lavished with its largest inflow since February of 2008. After months with barely any capital moving in or out, the iShares U.S. Broker Dealers and Securities Exchange ETF, IAI on the ticker, added $211 million yesterday. Shares advanced today by 0.9%. Briefly, Frontier Airlines says it will expand boarding and deplaning of passengers from both the front and rear doors of aircraft to more airports, including a new facility being built in Denver. Shares of Frontier ULCC ultra low-cost carrier up today by 3%. And that is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. Well, our next guest has written about Goldman Sachs, the fall of Bear Stearns. He's written about the Duke lacrosse scandal. He's written about his friends. His latest subject is General Electric, and it is so great to have with us in our Bloomberg Interactive Brokers studio, Bill Cohen. He's a former Wall Street M&A investment banker, I think, for 17 years?
17.
Long time. Financial journalist. He's been writing for a who's who of business journalism and more, including Business Week. He's author of many books, several New York Times bestsellers, former Bloomberg contributor, and I think you and I even anchored together at one point. We did.
Once upon a time.
Whoa.
The good old days. Talk about
I'm not
glory
even
days.
needed anymore. I'll just see myself out and listen to this.
His latest book is Power Failure, The Rise and Fall of an American Icon. Really delighted to have you in studio. First of all, how are you?
I'm great, thank you. It's great to be here. Great to be back in this building, honestly.
It is really great, right? A long time ago. You've been busy. Tell us about this book.
Well, there seems to be a strange pattern going on, Carol. Like, when I wrote about Bear Stearns, there was sort of a metaphorical dead body on the ground, and I wanted to know how it got there. Same thing with the Duke lacrosse scandal. Even the Goldman, I wanted to know how it avoided death. And with GE, to me, it felt like also there was a dead body on the ground, and I wanted to know how it got there. It was sort of like a mystery that I wanted to solve, and I felt compelled to solve it. So for some reason, I made the crazy decision to go back to 1892, the founding of the company, and try to figure out what happened. And even from the outset, things aren't exactly the way they seem. People think that Thomas Edison was the great founder of GE, but in fact, by the time his company merged with another company, another electric company, Thomas Edison was already out of the picture. He was just a small shareholder of a company that was controlled by J.P. Morgan and Henry Villard, with Henry Villard being the CEO, and then it merged with Charles Coffin's electric company to form General Electric, and Charles Coffin became the CEO of the combined company, with Edison not even knowing about the merger, not wanting the merger, and him just like floating off over to New Jersey to, create some sort of limestone mining company or something. So right from the outset, and then just one more thing, because it is darn interesting, is that was 1892, and then in 1893 was the big financial crisis, and GE almost went bankrupt, and if they didn't buy their debt back at a discount, if this sounds familiar, if they didn't buy their debt back at a discount with permission from JP Morgan, they would have gone bankrupt.
So fast forward to today, and
yes,
what we
let's fast
see,
forward.
what we see with GE today.
Deja vu all over again.
How would you where or when would you describe the turning point into the quote unquote dead body that you see GE as today? When did that start to die?
Boy, well, that of course is the subject of much debate. It's just sort of centered around the idea of whether sort of Jack Welch, bequeathed Jeff Immelt a company that was not nearly as robust as Jack thought it was. Jack thought he had bequeathed him a royal flush, and Jeff thought it was, kind of a losing hand. So whether that's true, or whether Jack actually left, he did leave him the most valuable company in the world, the most respected company in the world. But, he also, Jeff took over from Jack on September 7th of 2001.
Right.
GE made the engines on the jets. GE had reinsured some of the buildings down at the World Trade Center. And they, of course, owned NBC, which ran with no advertising for, at least a week, costing GE hundreds of millions of dollars. So, and they lost some employees that day. And, of course, everything kind of changed in governance after 9/11. And so, Jeff thought he had gotten a very different set of assets and opportunities than Jack thought he had bequeathed him. But so the question is, did Jeff play the hand poorly, or did, he make wrong decisions? I think really the turning point seemed to be the financial crisis, no surprise, because GE owned GE Capital, which was like the third or fourth largest financial institution in the country, and everybody was focused on Wall Street going down the tubes, but GE Capital almost went down the tubes as well.
Right. We're going to get into that and continue this conversation. Bill's going to stay with us. Bill Cohen is with us. His new book, it is on GE. The title is Power Failure, The Rise and Fall of an American Icon. So we'll continue our conversation in just a moment. In the meantime, we do want to get back to world and national news on this Tuesday. Certainly a lot going on. We've got Ann Moster. She's in the Bloomberg Newsroom. Hey, Ann.
Hi there, Carol and Tim. Poland, as you've been reporting, a NATO member hit by 2 Russian missiles today, killing 2 people, according to an unidentified U.S. intelligence official cited by the Associated Press. The strike was also reported by the Z radio network in Poland, which said the rockets fell about 4 miles from Poland's border with Ukraine. The Ukrainian Air Force has confirmed Russia has fired about 100 missiles at cities across Ukraine. Most of those targets were energy facilities, which could also affect neighboring countries. He's calling it a very major announcement at 9 p.m. Wall Street time tonight, and live here on Bloomberg Radio and Television. Former President Donald Trump is expected to declare he's running for the White House in 2024. We get more from Bloomberg government reporter Emily Wilkins on Capitol Hill.
Certainly, he still has a good amount of support within the Republican Party, but you are seeing party officials, folks in Congress, other Republican groups start to raise concerns and say, hey, this is a guy who has lost 3 times for us now. We need to start finding someone else.
BGov's Emily Wilkins. One of the latest Republicans to say so is Utah Senator Mitt Romney. In an interview with MSNBC, he called Trump an aging pitcher and said, quote, it's time to get off the mound because we have a really strong bench, end quote. Meanwhile, Kevin McCarthy has cleared his first test in his bid to become House Speaker, winning the Republican vote, but it's a long slog ahead to quell opposition. Airlines are scrambling to reach new contract agreements with their employees. Flight attendants for American Airlines are picketing at about a dozen airports across the nation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Mostu. This is Bloomberg.
All right, Ann, thank you so much. Ann Mostu with World and National News. Still with us is Bill Cohen. We're talking about his new book, author of Power Failure, The Rise and Fall of an American Icon. We're talking about General Electric, and we're going to get back to it. Something I want to ask you about that's not related to your book, but the crypto world. For someone who has understood the financial markets, been on Wall Street prior to writing all of these books, how do you see the crypto world right now? Do you think about it? Do you want to write about it?
Oh, I've written about it for Puck.
You have written about it.
Yeah.
Is there a book coming at some point?
Probably by Michael Lewis, I hear.
I think we all saw that news over the weekend.
Right. Yeah. I am working on a documentary film about cryptocurrency and did interview the infamous now SBF last December for 90 minutes for the film. You know, this is a watershed moment and not a good one. It's sort of, you know, it's hard to say whether it's an Enron moment, an MF Global moment, a Lehman moment. It's probably some of all of the same, and none of them ended well.
Right.
So it's not going to be good for FTX, obviously, already filed for bankruptcy. I mean, I think the big question is when you have the icon of the industry, you know, the guy who's supposedly the JP Morgan of the industry, you know, literally going up in smoke in 3 days when nobody even conceived of that. Of course, nobody conceived of Bear Stearns or Lehman going down or Enron or WorldCom or any of those things. Of course, you know, they happened very, very quickly. And, you know, I think, though, it's going to have huge ramifications. Obviously, for Mr. SBF, whether or not he goes to prison or not, you know, it's unclear whether, you know, he's, you know, criminally culpable for what went on or maybe just naive. I mean, it literally is unknown at this point. I think what we need is an examiner in the bankruptcy case, like there was in Lehman, to figure out exactly what happened, and I hope the judge appoints somebody. But I think this is going to chill, you know, investment in this industry for a while. But let me just make one other point. I also think that it'll be a good thing in the long run, just like, you know, Web 1.0 was a good thing to come and go.
We're going to come back with Bill Cohen right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Apple CEO Tim Cook says it has made a decision to source chips from Arizona. Also, another developing story, headline on the Bloomberg right now. The president of Poland is calling for a National Security Council meeting for tomorrow. The Dow, the S&P, NASDAQ all advanced today. We had the S&P 500 index advancing by 0.9% today. S&P up 34. Stocks gained as fresh data added to evidence inflation may have peaked, strengthening the case for the Fed to moderate its pace of interest rate increases. The Dow today up 56, up 0.2%. NASDAQ up 162, a gain of 1.5%. 10-year yield 3.77%. Spot gold up 0.4%, $17.78 the ounce, while West Texas Intermediate crude was up 1.1%, $86.78 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I want to get back to our guest, Bill Cohen, still with us. His latest book, well known, obviously, to our Bloomberg audience and a former Bloomberg contributor. His latest book is called Power Failure, The Rise and Fall of an American Icon. It is about GE. I want to ask you something, though, because you've written about Goldman Sachs. And our most read story on the Bloomberg has to do with Goldman paying out a $12 million, or well over $12 million, to a partner who complained internally about a toxic workplace for women in the highest echelons of Wall Street's most prestigious firm. This is our most read story all day today. I guess what I wanted to ask you is, what is the right question to be asking? Is this a Goldman story? Is it a Wall Street story? Like, what is it when we see something like this? Which is, as our reporter said, this doesn't happen a lot, and it certainly isn't made public a lot when something like this happens.
This is not just a Goldman Sachs problem. This is a chronic problem across Wall Street and has been for generations. My first book was about Lazard, where I had worked for 6 years, and I had a chapter in there, chapter 14, called It's a White Man's World. And it basically chronicled back then, that book came out in 2007, about the way women were treated at Lazard. And it was not pretty, okay? In my Goldman book, I also wrote about the way women were treated at Goldman. And I think I know some of these women who just, who brought this lawsuit against Goldman. This is a chronic problem across the industry. There's a lot of lip service paid to trying to treat people better. And not just women, but women in particular, and other people who don't have the opportunities they should have.
Why is it chronic?
That goes back to sort of the original culture, the original sins, if you will, of these firms, which were sort of like white male partnerships. And they were family-owned businesses. They were small, little family-owned businesses. There was a Mr. Goldman. There was a Mr. Sachs. There was a J.P. Morgan. There were 3 Lazard brothers. There were Lehman brothers. So these were all family-owned businesses. They were very wary of outsiders, didn't want, even to marry outside the family because they were afraid of diluting the ownership and the culture that they were creating at these firms. It was a matter of trust. But of course, as they got bigger and wealthier and more successful, they brought in other partners. Sometimes it worked, sometimes it didn't. And at Lazard, they were wary of bringing in, women. They didn't think women could, do this work or wanted to do this work. And I remember they had one woman, and then the idea was to bring in a second one, and some fancy partner said, why do we need a second partner? We already have one. I was a second woman. We already have one. I mean, that was the mentality. Yeah, whatever. Exactly. Yeah. I mean, obviously that's ridiculous and needs to change. But it's slow to change. And even when they give lip service to it, it's slow to change because it's not a particularly, pleasant work environment to begin with. It's very laborious, hard work, long hours. Nobody's going to have much sympathy for people who work on Wall Street given how much they get paid. But it's not, a great lifestyle. The work-life balance is completely messed up. And hasn't really changed dramatically, despite, again, what they say they're trying to do and pretending to try to do. So, I hate to be a downer on this, but the fact is there's a long, long way to go on this.
I want to jump in here. We got some breaking news. Apple said that it's preparing to get made in U.S. chips, or I should say, made in U.S. chips in a pivot from Asia supply. These chips are going to come from Arizona. We're going to get more on that in just a minute. Though, I want to go back to you, Bill, and talk a little bit about the culture at GE. Because for years, this was a place that...
Speaking of cultures.
Speaking of cultures, yeah. I mean, your newest book is about GE. For years, this was a great place to work, especially if you were upper management. Talk a little bit about how the culture there allowed for the downfall of GE.
Or was it?
Well, you know, my first job out of business school in 1987 was working at GE Capital, financing leveraged buyouts of all things, which was sort of like the last thing I would have ever expected to be doing in my life. At that point, I had been a reporter and had gone to business school, and then was working at GE Capital financing LBOs around the corner from here. And then I went and worked for the chief credit officer of GE Capital up in Stamford, Connecticut. I always found GE to be, you know, quote unquote corporate. You know, I wasn't necessarily a real corporate-y guy, but it felt corporate. You know, there were HR departments before, you know, Wall Street firms had HR departments. You know, there were lots of benefits and perquisites. You know, I got a company car. You know, I got to take these trips and go on golf outings and things like that. And it was sort of like rah-rah and really sort of American and sort of kind of white bready, you know? And, you know, it was okay. You know, I liked the people. I really liked the people I worked with. I think they were a quite unique group of people. And I really enjoyed interviewing the people for this book. You know, everybody from Jack, Jeff Immelt, you know, even to people like David Zaslav and David Calhoun and Dave Cody, the Davids, who all have become very successful. They just loved Jack, and they loved working at GE. I mean, it was incredible. I mean, having worked at a bunch of Wall Street firms, you know, and interviewed a bunch of people working at all sorts of Wall Street firms, you rarely get anybody who says how excited and glad they were to be working at Wall Street. But people really liked working at GE for a long time, or at least during this, you know, phase until things sort of unwound. And you know,
did Jack Welch, and I do feel like the history around Jack Welch is being rewritten,
challenged,
right, and
yes.
challenged. And is it right
I think
to
so.
be
I think it's unfair, to be honest with you. Okay. You know, I know David Gillis wrote that book about that, and you know, I don't think that's particularly fair. You know, I spent a lot of time with Jack. I worked there. I spent a lot of time interviewing. I spent time talking to Jeff Immelt and other senior executives and board members. And I worked there, so I really got a feel for the place. And I think Jack created something that was really quite special. He wasn't anything remotely like a saint. He'd probably been canceled long ago, in you know, today.
A lot of people would be.
But he took over a company that was worth $12 billion, and it became worth, you know, $650 billion when he left. Now, you know, that's quite an accomplishment. So,
world's most valuable company, right? At one point.
At one point, the world's most valuable company, the world's most respected company.
Yeah.
It was kind of like Apple, Google, Microsoft, all rolled into one.
I felt like earnings season would kick off officially when GE reported.
It was the bellwether, right?
Exactly.
You know, it was the oldest member of the Dow. It was, you know, and the technology that came out of that place was extraordinary.
Yeah. I wish we had more time. Will you come back and talk some more?
Whenever you like.
All right. We would love it. We would love it. Bill Cohen with us. You need to check out his new book because so much has been talked about, studied about, written about when it comes to the company known as General Electric. His book is called Power Failure, The Rise and Fall of an American Icon. Coming up next, though, we do want to point out that Joe Matthew with Sound On will continue to cover the Russian missiles in Poland, the implications, what we are hearing from around the world as we try to really assess this situation.
Yeah, and despite that news, we still did see an up day on the markets. The NASDAQ up 1.5%, the S&P up 0.9, and the Dow up 0.2%.
If you missed our conversation with Bill, check it out on our podcast. You are listening and watching Bloomberg Business Week on Bloomberg Radio.